The market has now fully embraced not just that the Fed has finished its hiking cycle, but that we're going to see deeper and deeper cuts next year.
The Fed is effectively, in a sense, putting fiscal policy on autopilot.
We think the Fed is going to be lower in terms of cutting rates than what the market is pricing in.
I don't buy the rate cuts that the market is pricing in. Right now, the markets are priced, I would say, for beyond a perfect landing.
We're in the rocky landing camp, at least for now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Live from New York City this morning. Good morning. Good morning. For our audience worldwide, this is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market just about positive on the S&P on a 3-week winning streak on the S&P 500. Shorter trading week for Thanksgiving. That's just around the corner. TK, we're going to start all snoozy this Monday morning. Talk about the soft landing hopes and dreams. We have to begin with a weekend full of palace intrigue over at OpenAI.
It's just amazing. It's like on a Friday, you figure out you're going to lose your job, and that's what happened to Mr. Altman over at OpenAI. Then we went through it 1, 2, 3, 4 iterations. Ed Ludlow, all-nighter, Friday, Saturday, and into Sunday as well. And here we are with a happy ending for Satya Nadella. About 2 o'clock this morning, Microsoft won, everybody else 0.
What a weekend.
Yeah.
What a weekend. Fired Friday, rehired Monday by a different company. Dan Ives of Wedbush says the adults are back. Bramo, this is what Evercore have got to say. It remains to be seen how much brain drain there will be over at OpenAI. We think the fundamental risk to Microsoft is largely contained with Altman and team on board. To Tom's point, Microsoft wins. The stock is higher, Lisa, by about 1.35% in the pre-market.
They're creating an independent AI group headed by Sam Altman and his peer, Greg Brockman, one of the co-founders also of the ChatGPT founder, OpenAI. Here's my question. OpenAI was founded almost as a nonprofit, right? The board is a nonprofit. It had very highfalutin aims. And there was a tension. Is this a commercial business, or is this something bigger about creating new technology that can innovate for humanity? And it really comes down to these questions. How does an independent agency that has the focus of making money police itself at a time of really uncertain rules?
I would suggest to people like me that were through the weekend going, are you kidding me? Can the Giants and the Jets be this bad? You know, the reality is there were 3 or 4 soap operas going on this weekend. One is the incredibly narcissistic idiocy of, as a broader sense, Silicon Valley. 2 is there's something really going on here. I've got a brother who says ChatGPT is the second coming of Christ. Great. And Microsoft got that. Microsoft got this weekend the guy that started this. And, it's going to be interesting to see how it sorts out. Nadella making happy talk with OpenAI about 3 hours ago, early East Coast morning. And, again, I'll see how it works out. But I love I'm so glad you brought up Mr. Ives, where the bottom line is, are the adults going to do this, or people looking at philosophical cosmic garbage out 10 years ago?
I think this morning, Tom, we've got to figure out what on earth happened over the last week. What happened on Friday? Lisa, was this about safety concerns? Was this about him going off and trying to build a venture that competes with NVIDIA? What was it?
I actually don't know, right?
Yeah,
this question of how much there were these developments with the former designer of Apple to create some sort of hardware around this that was not involving the board or anyone at OpenAI. There are all these questions. We haven't answered any of those questions. We are now left to pick up the pieces and wonder what's left of OpenAI and what's Microsoft going to do with
I know
this.
the show's got to move forward, but I would say Anurag Rana, Mandeep Singh, I want to know who has the code, who has the copyright, who has the line-by-line knowledge of this pixie dust that Microsoft thinks is worth $13 billion? I don't know the answer to that.
We'll be covering the story through this morning. From New York, good morning to you. Equity futures on the S&P 500. The scores look like this Monday as we kick off a new trading week. Futures just about positive by 0.05%. Yields a little bit higher by a couple of basis points here. No drama. Your 10-year, Lisa, 4.46.
I'm just going to talk about this shortened week and what we can expect. A lot of the data is sort of front-loaded. We do have an auction today, Tom. Funny that you mentioned that. We do. It's a 20-year auction. It's $16 billion of 20-year bonds sold today at 1 p.m. I actually think this is going to be fascinating because it's on a week that is shortened for the holiday, where people are trying to sort of eke out some volatility, some stability in the bond market after real whipsaw moves. Do we see that, or do we see some real pushback? Tomorrow, NVIDIA is reporting earnings after the bell, especially with the OpenAI intrigue and this question about whether Sam Altman was trying to come up with his own chips to compete with NVIDIA. How isolated is NVIDIA? How much do they have a competitive advantage in their AI chips? And I think that's going to be a real question, considering it's 238%.
Are they up to a record high, like Microsoft?
Yeah, they're all like going to the moon
like
because of the hope for artificial
John loaded
intelligence.
the boat on that in April.
Did he?
Yeah.
I wish I had.
I'll just finish up here. We also get FOMC meeting minutes tomorrow, initial jobless claims Wednesday, and global flash PMIs on Thursday, U.S. PMIs for November on Friday, just to see whether we continue to observe the deceleration in economic indications.
Lisa, thank you. Looking forward to this week, particularly the time off at the end of the week. Phil Orlando joined us now, Chief Equity Strategist at Federated Hermes. Phil, wonderful to catch up with you. We'll start with an easy one. Do you have more confidence that yields fall from here or that stocks rally from here?
I've got equal confidence in both, that we've got a deceleration in economic activity. You know, our chief investment officer, Steve Auth, has been instrumental in putting together this soft landing, rocky landing thesis. We think the next couple of quarters from a GDP standpoint are going to be decidedly slower than we saw in the third quarter. As a result, we're all in on this equity rally. We thought that at 4,100, I guess about a month ago, the Federal Reserve is done in terms of raising interest rates. They're on hold. They're going to be on hold till the back half of next year. So we expect that bond yields are going to grind lower. They've gone from 5% to 4.5%. We think that stocks are going to grind higher. They've gone from 4,100 to 4,500. And we think that's a trend that's got legs.
Phil, you're the only one that'll remember this. It's always good to quote the Dow on a Monday morning. Phil, I'm going to go back to 1977, and the Dow was 894. We had a first leg of a bull market out of 74, and then some real, not malaise, but, just some angst. And then, boom, in 77 it began. Is this the second leg of a bull market?
We think it is. And we think the Federal Reserve has done everything it needs to do in terms of creating that positive relationship between where's the upper band of the funds rate at 5.5% now and where's nominal annualized CPI inflation, which is 3.2%. So the Fed's finally achieved what it needs to do. And on top of that, the bond market's done the heavy lifting for it. Since the last Fed rate hike in July, benchmark 10-year Treasury yields have gone from 3.75 up to 5%. That gives the Fed the luxury, in my view, to step back and say, you know what, we don't have to hike anymore. We can just sit here on the sidelines for the next year and allow the gradual slowing of inflation to occur.
I want to talk, Phil, about the doing of a portfolio. So you're hanging out with Steve Auth. I assume you guys are on speaking terms. And you say to Steve Auth, are you going to widen out and go for breadth next year? Is it going to be the Magnificent Seven again, or do you see breadth?
The answer is breadth. That when we went all in equities a month or so ago, we took our equity overweight up to 5%. And our feeling is that the stocks that have been left for dead, domestic large cap value, small cap domestic growth, international, those are areas that are unloved. They're trading at very modest PE multiples, low betas, very high dividend yields. So we've started to see those stocks play catch up here in the last couple of months, and we think that's a trend that plays out over the course of calendar 24.
Do you care then about all of the artificial intelligence talk and the palace intrigue, as John was saying, around OpenAI, given how much that trend has driven gains so far this year?
Lisa, we do. And we were resistant in the first 7 months of the year because that Magnificent Seven, in our view, simply got ahead of themselves. So when we got that 11% correction over the August, September, October timeframe, a lot of these growth names came down by, 20, 25%. That gave us the opportunity to close what had been a significant underweight in those growthy technology names. We've gone from a 5% underweight to a 1% underweight. These are great companies. We just felt the valuation had gotten ahead of itself when we looked at them in July.
When you talk about grinding higher when it comes to equities and grinding lower when it comes to bond yields, how much does this actually lead to outsized gains versus just basically not losses?
Well, we think there will be outsized gains because if I gave you a little snapshot of our target for this year from 4,100 to 4,600. But as we look out to next year, we think the S&P 500 can hit 5,000 by the end of the year. And depending upon how the economy plays out next year, and certainly the results of the election next November, a year from now, are going to be critically important. The potential prospect of more business-friendly, more market-friendly fiscal policies could allow that rally to continue up in the 25 and 26 period. So we could have a really nice couple of year period here, but obviously there's a couple of shoes that need to drop and fall into place here in order to be able to make that forecast with a higher degree of confidence.
Phil, let's finish here. Data point of the week, jobless claims coming up before Thanksgiving. They've been climbing from very, very exceptionally low levels. Are you focused on the level still or the change?
John, I'm glad you brought that up. That is the one data point we're focused on this week. The October survey week, 200,000. It was a 9-month low. The number we're going to get this Wednesday is the November survey week. All right. The number that's expected is 225,000. That's a 13% increase. When we look at the non-farm payroll number last month with the revisions, it was the worst number we saw in 3 years. The household survey lost about 370,000 jobs. We think the labor market's starting to slow. The rate of unemployment has increased by 0.5% in the last 6 months. So the labor market is something we're watching closely. This week's jobs report, or the survey data for the initial weekly jobless claims, we think is going to be a critically important variable.
Hey, Phil, great to catch up. Thank you, sir. Phil Orlando there, Federated.
Happy Thanksgiving, guys.
To you as well. Happy Thanksgiving, sir. Looking forward to the holiday later this week. Lisa, this is the question.
Second time.
Second time. I'm sorry. Should we make it 3? Looking forward to the day off later this week. Okay,
carry on.
It's become a very special day for me. Anyway, jobless claims. What is the difference between a welcome loosening in the labour market and an unwelcome deterioration? That's going to be a huge question for market participants in the weeks to come, because I think at the moment it's welcome. Yields drop. You can have that constructive tone around equities. At some point, it starts to turn, Lisa. I just wonder how close we are to that.
If you look at history, there is always a non-linear increase in unemployment rates once you have a 0.5 percentage point increase in the benchmark jobless rate, which is basically what we've gotten over the past 6 to 8 months. So this raises a question. Is this time different? And a lot of people are saying, yes, it is. And then everyone says those are the worst words to ever say in finance or anything else. So here is where we're at. Do you go on history, or do you go on the fact that we're in a unique period that's been distorted by a whole host of factors?
I would listen to somebody who had the courage in December of, it was a long time ago, John, help me, 2018-19, Ben Laidler, all alone at HSBC, said, just shut up and buy. He was really alone. Laidler with a weekend note, and Lisa, to your many good comments there, it's a tall wall of worry, and Laidler's adamant it is fading away.
He's still bullish.
He's not only bullish, but he reaffirms.
Bullish most this year.
He reaffirms the why he's bullish here at this season, where he literally made his modern career.
Have we said happy birthday to the president yet?
We should.
Happy birthday, Mr. President.
Greg Villiers want to say happy birthday.
NBC News gave him a gift. That poll over the weekend.
That's not a gift.
Not much of a gift, Bramo, was it? Did not make for good reading.
What do you give a president for his birthday?
Not that approval rating, exactly.
Just 33% of all voters approve of Biden's handling of foreign policy, down 8 points from September.
And
that's the story.
And how much is it related to his 81st birthday, right? It's sort of an awkward celebration when it's the biggest liability against him in this particular election.
What I find fascinating, and I'm sure Greg Giroux and others at Bloomberg, Emery Horton, are going to do great work on this, the cumulative effect of inflation is his biggest problem. I mean, forget about all this modern political stuff.
You think that that's it, more than his age?
Yeah, people are looking back to the fall of 2019 and saying, am I better off? And the answer is no. I mean, look what that artificial tree cost you. It was lifted. Is that puppy up
Actually,
yet?
no, that was Home Depot. I think that was like $150. That wasn't too bad. It's up. It went up on.
You need a charity Christmas tree.
Your charity tree last 2 weeks and cost $350.
$400
From New York. Good morning.
How would you describe your relationship with Satya Nadella, how much control they have? You know, I've heard people say, you know, Microsoft's just going to buy OpenAI. You're just making big tech bigger.
company's not for sale. Like, I don't know how to be more clear than that. We have a great relationship with them. I think it's that these like big major partnerships between tech companies usually don't work. This is an example of it working really well.
So well, he's now working there. The former OpenAI CEO, Sam Altman, speaking to Bloomberg's Emily Chang earlier this year. Altman ousted from the company late Friday, now joining Microsoft and leading its new AI development team. Big weekend. Big story developing through that weekend. We'll get to it in just a moment. Welcome to the program from New York City this morning. Good morning to you all. Your equity market on a 4-day winning streak on the S&P, 3-week winning streak on the benchmark here in America. Equity futures just about positive by 0.04% on the S&P 500. Yields pushing a bit higher on a 10-year by a couple of basis points. Call it 3, 446.27. Big move lower last week, TK. 10-year yield down by something like 22 basis points to the lowest since September.
With all this madness over the weekend, let's just focus on the data right now. And you mentioned that, John, the dynamics there. We're looking at, futures up to the VIX 14.16. The dollar weaker maybe is the lead story that no one in America is looking at today.
Worst week since July.
And it's like a legitimate rollover. Kit Jukes, I thought was great on it. And his morning note, Jukes, commenting here on, weak dollar, lower dollar changes things.
Well, I mean, how much does this have to do just with rate hikes being taken off the table and rate cuts increasingly being priced in by even as early as May next year? And how much does this have to do, to your question, John? Is this just an orderly unwind of a super hot market, or is this something more pernicious that has legs that could lead to a more protracted downturn?
A big focus, Tom, on claims. We're at that stage of the cycle where you start to focus on claims.
Yeah, and that's the Morgan Stanley Goldman Sachs differential is the labor economy.
Lisa mentioned something that Priya Misra also echoed on Friday, that when you start to get these conflicting narratives, Lisa, that maybe you are at a turning point in the cycle, which is something that Priya over at JP Morgan made a point of saying.
We've been seeing this conflicting data points for quite a while, which is part of the problem, right? And adds to the confusion. At this point, it's clear there is a downtrend in the data. The question now is just how far will that go?
DXY 105, 104 to 103.60 euro. Do you retire with a euro 110? Is that like that good for you?
110?
Yeah, 110. Is that
closer to parity, and then I can make the move.
126 sterling. We're not there yet.
I'll take 95 on euro dollar, Tom, and you can retire me.
Okay.
Retire me.
Yeah. Speaking of retire me, joining us right now from London, and it's good to get his perspective. A lot of different perspectives on the festivities over the weekend. From a distance in London, Mark Bergen observed what we saw in California and gives us a cultural overlay today. Mark, I was sort of dumbfounded, and I love what Dan Ives of Wedbush said, that the adults won. We saw that 4 hours ago. Yeah, 4 hours ago, where these guys joined Microsoft, and they're going to be a folded-in research group of Microsoft and that. Is it going to be a brain drain from the children of Silicon Valley over to the grown-ups?
That's one way to put it. I mean, it's certainly we saw the announcement. Greg Brockman, who's another co-founder of OpenAI that's now also joining Microsoft, posted on X, tweeted that there's at least 3 other research scientists from OpenAI who are joining them. Sam Altman, for probably his best quality was to be this diplomat and recruiter, and he was going out and poaching these top talents from Google, and now can do the same thing, presumably inside Microsoft.
Well, Mark, what's great about this, and I know you did this in Chicago studying public policy, it is about a public image and private conversations. Altman was basically a wonder child out of St. Louis, 1 year at Stanford, said, see ya, and he's a people guy. Explain how he works in dialogues between corporate types like Satya Nadella and some high-strung genius AI guy writing code.
He's pretty masterful at this. I mean, he spent his formative years at Y Combinator, which is like the incubator of startups inside Silicon Valley, and has this built these relationships, I think, in part because you have a lot of venture capitalists, you have CEOs like Satya Nadella and all the big tech companies looking at Y Combinator, sort of saying, here's sort of what's coming next in innovation. Here are the startups that we might want to acquire or we might want to fear. What he did on this he kind of did a globetrotting tour this summer with OpenAI, and he came to visit London and at UCL, and he's treated like a rock star, right? Like after his event, he was just, I couldn't get near him. He's just mobbed by developers and fans. I think people who are wanting to glob on to this revolution that they see as sort of the next wave of computing. And he really leaned into that in a way that, say, Demis Hassabis, who runs DeepMind, is a much more sort of prototypical engineer, a little more quieter, contemplative, not as comfortable being that sort of figure that I think Altman can be.
So is this basically an example, Mark, of how the behemoths in the tech space are going to own artificial intelligence, are going to either buy or destroy de facto some of the startups that are coming up with the key software, and really the dominance is just going to continue to consolidate?
It's hard to argue against that. This has clearly been, for Microsoft, been this big boom for their cloud business, right? Challenging Amazon and Google for their developer business. Their relationship with OpenAI is kind of the biggest investor and partner, but it was a little unclear, like when they were going out, OpenAI is obviously trying to commercialize this, and Microsoft is basically selling the same thing. And I think that tension's only going to increase. We've certainly seen the gains from AI so far go to NVIDIA, Microsoft, and Google. The one exception was OpenAI, and that'll be I think in the coming weeks we'll see when these engineers land, right? The engineers who actually build and maintain these large language models are kind of the key ingredient, and whether there's this mass exodus will really answer that question.
Yeah, in the past hour, Sam Altman has retweeted 2 different comments saying OpenAI is nothing without its people. So to your point, sort of signaling some of this exodus or foreshadowing it just a bit. Moving forward, there is this key question around what actually happened. Was the ouster really driven by concerns about a lack of ethics or a lack of understanding of the potential dangers of artificial intelligence, or is this a personality battle that had to do with some of the side dealings that Sam Altman was working with?
Yeah, I'd say a lot of it's coming from our reporting, in part because the board of OpenAI, as far as I know, has not, unless it's happened in the past few minutes, has not put out a statement or not put out anything really clarifying beyond their initial comments that he was not candid in his communication. So our line of reporting showing that Altman was out there raising capital from investors in the Middle East for both a new AI chips business that would challenge NVIDIA, potentially a new hardware piece of like a device working with Johnny Ive, famous for designing the iPhone. That seems to be an issue. The other one is just the debates around AI safety. So some of the other founders of OpenAI believe fervently in this idea that they're trying to build an artificial general intelligence. And they're also, and the new CEO they brought in, Emmett Shear from Twitch, has also been part of this philosophy that believes that AI poses this existential threat to humanity. And if you believe that, and you believe that a CEO was leading in a opposing direction or something to harm that risk, then I think that would make sense, justify perhaps. But I feel like there's something else that we haven't heard.
Mark, thank you, sir, for your perspective on things. Mark Bergen there of Bloomberg out of London. Dan Ives of Wedbush out on Twitter. Here's another tweet. The circus show 4-person board at OpenAI was at the kids' poker table and thought they won, until Nadella and Microsoft took this all over in a poker move for the ages, with the Valley and Wall Street watching nervously Sunday night. Microsoft now in a stronger AI position, TK, than ever before.
Long ago and far away, a gentleman from Middlebury College, Dennis Kozlowski, was a company called Tyco. He enjoyed some prison time off of that. Really challenging. On a conference call, I heard Dennis Kozlowski say, "We take out for the engineers." The only reason Tyco would buy an acquisition was to buy the brain power, which you just heard from Mark Bergen.
Yeah, and you can come up with whatever narrative and the circus and the adults and the other things. You can put it all together and make a beautiful story. We don't really know what happened, but the bottom line is, as he says, the consolidation among the dominant big tech names is almost that much more of a certainty.
Let's put it this way, and we've got no idea what really happened over the weekend. Let's be clear about that until we actually get a statement from the board, which would be nice. If the board was concerned about safety, given what's happened with Microsoft in the last 24 hours, haven't they just heightened that risk by the move they made on Friday?
100%. Ultimately, is it a commercial organization or is it something else?
Well, Microsoft for sure is a commercial organization,
Correct.
without a doubt. Andrew Holdenhorst over at Citi joins us next from New York City. Good morning. 4 days of gains on the S&P 500 could become day 5. Looking at equity futures right now, we are advancing by just 0.04%. The Nasdaq 100 up by 0.1%. 3 weeks of gains for the first time since July, believe it or not, on the S&P 500. Things have been that rocky. The narrative just switching back and forth. James Athey, Aberdeen, keep quoting him from months and months ago. Narrative, table tennis or ping pong. Pick your version of things. 2-year, 10-year, 30-year looks like this in the Treasury market. 10-year yields down more than 20 basis points last week. Lowest level since September. Yields a little bit higher by 3 basis points, 446.47. 2-year yields last week down around about 18 basis points. Just the whole curve, Lisa, shifting lower. 2-year out to 30 years.
Soft landing. That has been the hope, the dream, the idea that what we're seeing right now is a controlled softening in the labor market, et cetera, and can continue just landing this thing in this fantastic way that can give the Fed confidence to say, we've done it, which makes me wonder what they can say to make anyone think that that's not how they're feeling.
I was sitting on the Bloomberg yesterday evening, just going through the numbers for the week, and I was sitting there thinking, CPI was this week.
I know.
Not even a week ago.
I know.
It feels like months ago.
But it single-handedly changed the narrative.
That small downside surprise enough to engineer a monster move in the bond market and this in the FX market. The worst week for the US dollar on the dollar index going back to July, Tom. The euro at the moment, 109. We've reclaimed 109 on the euro against the dollar.
And saved Japan as well, 164 down to 162 euro yen. And dollar yen, the same thing. I take your point that CPI was ages ago, but it's the forward data that's going to matter here, right into the jobs report for November.
Yeah, looking ahead to claims. We'll get some Fed minutes later this week as well. Let's get you some top stories. Under surveillance this morning. Fired by OpenAI on Friday. Hired by Microsoft on Monday. OpenAI co-founder Sam Altman joining Microsoft to lead its AI program just days after being dumped by his former company after he, quote, lost the trust of the board of directors. Microsoft, of course, holds a roughly 49% stake in OpenAI, but CEO Satya Nadella failed to have Altman reinstated at the company. Nadella, writing on LinkedIn, quote, we remain committed to our partnership with OpenAI and have confidence in our product roadmap. Bramo, what a messy weekend trying to follow this one.
Yeah, I'm not sure that I come up with anything conclusive in terms of understanding what actually happened.
Nobody can.
We have no idea. The bottom line that I can see is Microsoft, as Tom said, is the winner. All of the big tech names are going to be the winner as they consolidate some of their power. And that also technology is moving faster than any regulation or agreed upon code of ethics as to how this should move forward. So to me, the cat's out of the bag. And the question is, what's going to necessarily come of this as profits are prioritized?
I agree with everything you said, except one small detail. On a game theory basis, I'm trying to figure out how Amazon and even Google involved in this, how they win if the cricket player from Microsoft takes the talent. To me, it's all about the talent. And I got to believe at the margin, the engineers Microsoft migrate to stock options on Microsoft.
And Microsoft in the driver's seat, that's for sure. Yeah. Your next story, this one. Libertarian outsider Javier Milei promising a radical shake-up after winning Argentina's presidency. Milei's campaign pledgings include ditching the peso for the US dollar and shutting the country's central bank while undertaking drastic cuts to public spending. Inflation in Argentina has soared towards 143%, with more than 40% of the country living below the poverty line. And Lisa, clearly, they wanted something different.
Oh, clearly. Did you see some of these videos? Health Ministry, out. Department of Education, out. Central Bank,
Which ministry
out.
does he want to keep?
No, nothing. He doesn't want to keep anything. He's going to keep the U.S. dollar, and he's going to talk about, some of his quirky, eccentric habits, and let's see.
Shut the central bank, Tom. The peso's out, the dollar's in.
He's got a blue backdrop behind him, which is what they call the blue dollar, which is the black market dollar. Basic quote, 869. The peso's at 353, and the real free market, black market, blue dollar is a little bit weaker, 869 per U.S. dollar. To get to an even 1,000, fireworks.
So did Jay Powell wake up this morning, the chairman of the Argentinian central bank?
No, I think Kristalina Georgieva woke up as chairman of the Argentinian Central Bank.
Well, that's a good point. In other words, what's the IMF going to say about what's going to happen with this country, especially given the fact that Fed Chair Powell is central banker to Argentina, but is not representing them in any way, shape, or form?
I think I saw a line that the IMF congratulated him.
Okay.
I saw that line, which is good news. Let's finish with some sad news. Rosalind Carter, former First Lady and husband to President Jimmy Carter, died at a home in Georgia over the weekend. Carter was known as an influential advisor for her husband during the time in office, attending cabinet meetings and leading efforts to improve care for the mentally ill. Rosalind Carter was 96. Entering hospice care, Tom. in the last month. Jimmy Carter, of course, the former president, has been in hospice care now since mid-February, I believe, Tom. So going back to February this year.
A rich and full life, and what's so important here is she and a compendium of first ladies changed the dialogue. And I would also notice right around her time, Betty Ford was the same way. They just said, no, we're not going to do this traditional. We're not worried about the China in the East Room or the Lincoln Library. You know, let's do something different, and that's what she'll be known for.
It's a great story, though, from a human perspective, too. They were married for 77 years, and Jimmy Carter met her for the first time when he was 3 years old, and she was just born, delivered by his mother.
That's amazing.
And he saw her in the cradle because she was the newest kid on the block from their neighborhood. And so, 18 years later when they met, and then they grew up together in a very real sense and were co-presidents. It's a pretty fantastic story.
Yeah, really wonderful to say the least. Let us continue with economics, finance, investment, and international relations. Joining us, he's on the short list to be the new Minister of the Economy for the Argentine Republic. Andrew Hollenhorst joins us, Chief U.S. Economist at Citigroup. Before we get to the serious stuff at hand, how do you save culturally? I mean, Citigroup, with your incredible Latin American experience there, no other bank has that experience. How do you save Argentina?
Yeah, I mean, I think it's what we're seeing in Argentina is what we've seen in a lot of places across the globe, which is this kind of anti-establishment, anti-institutionalist trend that we're seeing in policymaking. And when you look at the inflation rate in a country like Argentina, you can see why people are looking for a change.
How are we seem so alone now in a constructive policy out of the pandemic. How alone will American policy be in 2024?
I mean, I think one thing that really strikes me when you look at U.S. policy relative to the rest of the world is the deficit in the U.S. This is a country now where we're running 6, 7, 8% of GDP deficit in a world with a very low unemployment rate. There are very few countries that can do that. The U.S. may be the only one, maybe some other examples that can just consistently run a large deficit like that and continue to provide generous fiscal support. So that's just a very different situation for the U.S.
Big data point this week, jobless claims. Let's go there. You mentioned this in your research. At some point, this loosening of the labour market is an unwelcoming deterioration in the data. Are we close to that on jobless claims?
We may be, and I think that's, I think you said it earlier, we're getting some conflicting data here. You have the unemployment rate that's up about 0.5 percentage point over the last few months. If you just look at that data series in isolation and don't try to kind of explain away what you're seeing there, and that's what we tend to do as economists, that's what you've seen before every recession. It looks very much like the path into a recession. Now the jobless claims have been low, they're still low, but they're rising. So I think that's the difficulty. We're waiting for data that will confirm one of these narratives, and you just don't have the data in yet.
Neil Dutzer of Renaissance Macro had this great phrase in the last couple of weeks, soft landing nirvana. A lot of people are embracing that soft landing nirvana. Are you still anticipating that this dual mandate of the Federal Reserve is going to be in conflict in the coming quarters?
I think more likely than not it will be, and that's just based on the history of what we've seen in cycle after cycle. It would be great for the Fed, it would be great for the economy if you just had this wonderful nirvana-like scenario where everything kind of slowed on the same schedule. If we had a different inflation print last week, we'd be having a very different conversation now, and I think that just shows the extent to which this market is focused on the very recent data. So we had softer inflation print, we have jobless claims that are coming up a little bit. That looks like something that could be consistent with a soft landing. But are you going to get some data that starts going in different directions? Probably. And this is probably going to become a lot more difficult for the Fed.
But just to build on that, is there an inherent conflict in your belief of a growing chance of a hard landing, of a recession, but also sticky inflation?
Yeah, so I think that's the real difficulty, and that's what we haven't seen really in decades, where you have inflation that's still running above target and you have growth that's weakening. Now, maybe they're going to happen together. Maybe they happen together in kind of just the right quantum so that you get the soft landing. I think it's a possibility. But the more likely scenario is that we'll have these kind of going in different directions where inflation probably stays stickier and higher. One issue with inflation and the way that the Fed is conducting its policy is inflation is going to lag what's going on in the rest of the economy. So even if the economy starts slowing down, job market starts loosening, you'll still be running inflation that reflects where the economy was 6 months ago or or a year ago, and 6 months or a year ago is very strong.
So are you saying that the Fed won't be cutting rates as much as people think next year because they won't be able to justify it given where inflation is?
Yeah, I think that's really the risk here, and it could happen a couple ways. So you could have this scenario where the activity data is weakening, but you still have inflation that's sticky and high. On the other hand, even if we're on something that ends up looking more like a soft landing trajectory eventually, there wouldn't be a lot of urgency for the Fed to cut rates in that scenario. I know theoretically, if inflation comes down, and I agree at some point the Fed would be cutting rates, that could take a very long time before we would actually get those Fed cuts.
I need to ask you about the linkage from your UCLA and the giant almanac over to William Sharp, who was a student up at Stanford eventually, to you, which is the risk-free rate. You absolutely nailed the increase in rates. Do you have any clue where the risk-free rate is in 12 months?
Yeah, like we were just discussing, it's going to depend on the economic scenario, and I think you have to be open to economic scenarios here. We do know that we're in a world where inflation has been higher, has been more volatile. We know that the correlation between equities and fixed income has flipped. Essentially, you have equity prices that are falling at the same time bond prices are falling. That means there'll probably be some more term premium in there. That means you'll probably have a higher interest rate, all else equal. So if anything, that risk-free rate is probably going to be higher.
Andrew, what changed? What changed? What changed about the fundamentals of things that's going to lead to this different outcome now relative to pre-pandemic?
I think the single biggest thing you can point to is what's different in goods inflation, and I think that's what we're all not looking at enough right now, because we've had a big disinflation in goods. So I think it's easy to kind of look at that and say, well, we've kind of returned to this pre-pandemic goods deflation, and that's what we had pre-pandemic. Goods prices went down over time. And I think anyone who's been out buying things over the last couple of years, certainly the experience is not that goods prices are down. Now, some of that was specific to the pandemic. Some of that's not going to continue. But what will continue is this kind of topping out of globalization, maybe going the opposite way in terms of globalization. And that means that stream of low-cost goods is just not going to be there in the same way that it was, putting downward pressure on goods prices. So I think we can expect goods inflation going forward.
So this is a secular call for you. It's not a call about the cycle.
So that's a secular call. Yeah, I think that we're in the idea that inflation now is higher, more volatile, that the economy is more subject to supply shocks than demand shocks. These are structural secular changes.
Andrew, great to get your perspective on things. Thank you, buddy. It's good to see you.
Thank you. Great to see you.
Andrew Honhorst, the City, TK, potentially seeing the dual mandate of this Federal Reserve in conflict going into a new year, whereby growth gets weaker, unemployment maybe climbs a little bit higher. You see that in jobless claims at the moment, and inflation remains sticky, in and around 3%.
He's auditioning for governor of the Fed. The answer is he's migrating from 2.0% back up to something new out there somewhere. I mean, it's as simple as that. Is there a new regime out there?
But it raises this question, you're correct. At what point does the Fed not really cut rates as much as people expect because inflation won't justify it, right? And this is really the key question. Are they necessarily de facto going to be so late to the party to necessitate some sort of bigger downturn and a more stagflationary type feel for at least a bunch of months in the next couple of years?
That wasn't that gloomy, was it?
No, it's edge of gloom.
On the edge of gloom.
No, it's edge of gloom.
Okay, just a sprinkle of gloom. That was sprinkle of gloom.
Sprinkle
of gloom.
For the holiday season.
Why not just a sprinkle of gloom?
John, the Bulls are publishing this morning, Stolfus out with a very nice note. And of course, he's always modest and never taking a massive victory lap. But he says, we're going up not on stimulus and not on public policy. Granted, as Dr. Hollenhorst mentions, the damage is done.
On a profit
in terms
recovery?
Of debt and deficit. But we're going up because we're going up. That's a John Stolfus
statement. Just because we're going up. Okay. That
what about
explains
Yardeni out at 5,400?
I know. Looking for a big year next year, maybe, Tom. Coming up, Anna Ashton of Eurasia Group on China. That conversation just around the corner from New York City. Equity futures on the S&P 500 just about positive. Yields higher by 3 basis points. 4.47 on a US 10-year.
We're, likely at or near the peak of where we need to be in terms of having a sufficiently restrictive stance of monetary policy that will sustainably bring inflation down to 2%. And I think the recent economic readings reinforce my view that is probably correct.
We've heard that many times over the last few weeks. That was Michael Barr, the Federal Reserve Vice Chair for Supervision, speaking to Bloomberg's Joe Weisenthal and Tracy Alloway at an Odd Lots event here in New York City. Here in New York, welcome to a new trading week. Your equity market looks like this on the S&P 500, just about positive 0.04%. Yields a little higher by 3 basis points, 446.86 on a US 10-year. In the FX market, the dollar weaker once again, and all of last week as well. 109.23 on the euro against the dollar. We're positive here, Tom, by 0.07%.
Chinese yuan comes in as well, stronger renminbi. There's just no question about it. 7.17 is a good thing. To have the renminbi go under 7 would be a huge, huge plus for all involved.
Can China turn it around next year?
That's a huge mystery.
Pretty disappointing year, 2023.
You know, yes, I think, and it really has to do with medicine. I mean, the idea of COVID and what many critics in the West would say, the arrogance of thinking you solve COVID by constraint and sequester, just really didn't work.
And Tom, we had this revenge spend of the consumer in the West and America, in Europe.
Yeah.
Couldn't wait to get back out, spend money. Confidence of the Chinese consumer shattered, absolutely shattered, Tom.
And again, this is, somebody brought it up late last week. I'm so sorry I can't remember, but the basic idea of the hope and prayer of a building consumer, not out to 70% of GDP like here, but something that moves beyond a totalitarian regime out to a free, open consumer has once again been postponed.
Heartwarming changes for the business environment coming to a China near you. Did you hear that last week?
I did. No,
I actually didn't. No, I didn't, which was actually interesting.
He told us they would come.
Okay, but was it heartwarming?
I'm not sure how heartwarming it was for you.
Wait,
how difficult is it to warm?
We got to tie this in. I mean, at the dinner in San Francisco, was Sam Altman at the dinner in San Francisco?
I don't know that. I don't know the answer to that question. I did get someone writing it a minute ago who said The Edge of Gloom sounds like Bramo's solo album.
It's beautiful.
It's good. You know, she got Bon Jovi singing backups on that.
Nice.
Nice. This works out well. Right now on China, and particularly after the theater and the statements of last week, Anna Ashton joins, really quite qualified at this Director of China Corporate Affairs, U.S.-China at Eurasia Group. And I want to get beyond the festivities last week to just simply the now what for Beijing. What is their next step?
Well, I think an interesting next step that isn't exactly directly related to U.S.-China is the fact that they're hosting Arab leaders right now to talk about how to bring the conflict over Gaza to an end. And I think underscoring their role as an emerging leader in moderating international disputes and trying to bring about peace. So that's interesting, certainly flexing muscle diplomatically. In terms of what's next for the U.S. and China, though, you know, this was an important meeting. It capped off a year of back and forth between the two sides, trying to set the stage for some progress in the relationship and certainly trying to stabilize the relationship. I think that there's a lot that's been accomplished here in that regard, the fentanyl deal being a particularly important one from the United States perspective. But at the end of the day, you know, both nations still fundamentally are distrustful of one another. The U.S. still fundamentally sees this as a competitive relationship. And we're heading into a 2024 where we know that there are going to be speed bumps. There's going to be the Taiwan election, which could trigger reactions from China that are militarily bellicose, and that then trigger reactions from the U.S. Congress and make it hard to maintain that stability. Then there's an inauguration in May of that leader who is elected in January in Taiwan. And then, of course, there's the U.S. election and all of the political rhetoric that comes with it in November. So, you know, it remains to be seen exactly how much progress has been made that is lasting.
Everyone was smiling for the cameras. That was the takeaway last week. Happy families. Anna, the thornier issues that you mentioned, the points of military tension in the Middle East, in Ukraine, were they addressed last week?
Not substantially, no. There certainly wasn't progress on those things. And we weren't expecting there to be progress. But I think that underscores the point, right? That this is a relationship that has been at its lowest place in, 40 years. And there is a long way to go before this relationship becomes one where cooperation can deliver, really meaningful, tangible benefits from a global perspective. And it's not a sure thing that it will get there.
How much did the Chinese representatives, including Xi Jinping himself, reassure U.S. businesses that it was safe to come back?
That was a key message, and it was a key message when I was in China the last couple of weeks as well. It's very clear that there is a deep desire to reassure the foreign business community and attract foreign investment back to China. And there's, pretty clear economic reason for that too. There's a lot that China would like to do to stimulate its economy that really kind of requires foreign investment right now, because the debt situation of local governments and the pressures that the central government are under, there's not a whole lot of room monetarily to deliver the kind of big stimulus packages and things that have been delivered in the past. And there's no certainty that a big stimulus would even work, since, the goal is to improve consumer confidence. And we have yet to see China deliver a stimulus package that's focused on putting money in consumers' pockets, right? So they really do want foreign direct investment back, and they're trying to attract it. But at the same time, there are these regulatory and compliance concerns that the foreign business community has operating in China that haven't necessarily been assuaged.
Right. And that's sort of what I gathered last week, was that essentially China was making a big pitch and companies were saying, I'm not really hearing anything that's going to make any difference. What really the takeaway may have been was just how much the leverage has shifted to the U.S. over China. How much does that accurately represent the situation economically, considering the fact that China does want foreign direct investment, which has gone negative for the first time ever in data going back to the 1990s?
Well, I think it's important to remember that there are other sources of foreign direct investment, and the U.S. is, of course, an important one. But China has other partners that they can turn to. So there is leverage here, but it's not limitless leverage. And of course, to the extent that the U.S. is able to keep the EU and other major trading partners aligned with U.S. policy with regard to China and economic relations, as well as tech sharing, then it matters more what the U.S. position is, because the U.S. position will influence those other trading partners. But, I think that China is looking at the U.S. political situation and sees lots of potential for things to shift come this time next year.
I think that's what we all see. Anna, thank you. Anna Ashton of Eurasia Group going into next year. Anna, Tom just went through a list of things on the calendar for next year that could reshape this relationship. And top of mind here, of course, home bias is the election taking place 12 months from now. The election's got to be there. And, you look at the collapse of TPC, which Ian Bremmer led the debate on at Eurasia Group. I mean, it's going to be a bipartisan pile-on China. That's certitude within the dialogue of the American debate. But, my basic thing, and, it's hilarious over the weekend to see the pitching of the outlooks for next year. I don't have an outlook for the S&P. I certainly don't have an outlook for the Dow Jones Industrial Average. And anyone with an outlook on China is out of their minds. It's just go read a book. The lesson of this year, wasn't it? Yeah. The lesson of this year. They're going to reopen, growth's going to be great, and then they reopened and growth just wasn't great at all, Lisa. That's been a story of 2023. Which is the reason why I wonder what the Chinese government can possibly say to get U.S. companies to go back. If you can't create an outlook, how can you make a big bet? The way I look at it is surveillance on the balcony of the Peace Hotel in April of next year. You've been pitching that for a long time. Spring, and yeah. I think, team surveillance out there, it'd be a good way to have important interviews. We could send you. Key focus. You'd be good out there. Yvonne Mann and I. That works. On the balcony. New lineup. It's a very cool balcony, actually. Very, very cool. Never been. Balcony. Never been. Yeah, very, very cool. Okay. On the Bund. You make that pitch. Yeah, I'll make that pitch. All right, we'll continue the market coverage. Out recently. Mark Haefele of UBS Global Wealth Management coming up very shortly. Looking forward to that conversation on the equity market. Abramowicz over at UBS talking up rates coming back down to the ones. Lisa, which is just like nothing's changed. Andrew Honhorst literally sat around the table with us moments ago and talked about what has changed. And the view from Abramowicz is, what's changed? He doesn't think anything's changed. Williams. Yeah, one of the biggest tensions right now. That without a doubt. Get essentially, back to stagflation, back to no inflation. Without a doubt. Is the tree up at the Keene household, TK? No, the tree's not acquired yet. We're negotiating. Okay. We're trying to do a mezzanine finance. Right. Is that expensive? It's that expensive. Yeah, we're doing a mezzanine. The tree's up here at Bloomberg. Involved. I saw the tree up here at Bloomberg. Yeah, Jim and Apollo's trying to make it happen. It's beautiful, right? It's not just one. Did that warm your heart, Bramo? It made it less cold.
The market has now fully embraced not just that the Fed has finished its hiking cycle, but that we're going to see deeper and deeper cuts next year.
The Fed is effectively, in a sense, putting fiscal policy on autopilot.
We think the Fed is going to be lower in terms of cutting rates than what the market is pricing in.
I don't buy the rate cuts that the market is pricing in. Right now, markets are priced, I would say, for beyond the perfect landing.
We're in the rocky landing camp, at least for now.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Let's get your week started. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowicz. I'm Jonathan Ferro. Your equity market on the S&P 500 positive here by 0.05%. The week ahead, TK, looks a little something like this. We've got some Fed minutes, some jobless claims on a 3-week winning streak on the S&P, looking to make it week 4.
New employee tour at Microsoft as well. I mean, 235 this morning. We've been following the soap opera all weekend along with what we've got. Equities lifting right now. Futures up 3. That's better than they were an hour ago. But, 235 this morning, the world changed here. And you wonder, does Microsoft, does NVIDIA this week, does that lift up the market given the different rate scenarios that we're getting this morning?
Let's separate the stories just for a moment. Let's separate the stories just for a moment. So Sam Altman out of OpenAI on Friday. Big questions being asked about maybe him returning, then all of a sudden rehired, except this time to Microsoft. Microsoft basically up in a pre-market because some people say the adults have taken over and Microsoft wins, Bramo. That's the take from Evercore, Dan Ives of Wedbush as well.
We don't have any idea what's actually going on, except for one thing, which is this was a startup that wasn't for sale, and all of a sudden they got it without even buying it. And to me, this really points to consolidation among the biggest
I totally agree. In the
tech
strongest
players.
terms.
And at this point, what does that mean about how much they are going to diverge, both in valuation and just consolidation from the rest of the market economy?
I don't have a slogan for it yet, John. I'm really struggling with this. Send me in your slogans. I'll steal it. There's a royalty on the back end. But the basic idea here is I'm going to go with the Magnificent Seven continues for 2024. And when you steal Sam Altman under this soap opera, the childishness of it, the adultness of it, as you mentioned, the bottom line is, as you say, Lisa, all the big guys win. That's all there is to it.
Well, let's get to the Magnificent One, and then we can link the two stories. NVIDIA up by close to 240% year to date. And reporting from Ed Ludlow and the team here at Bloomberg, that Lisa, Sam Altman was looking at maybe launching something that could compete with NVIDIA, which raises questions about what might happen next over at Microsoft.
That's exactly what I was going to say. He's going to have a much bigger checkbook if he's working for Microsoft and trying to create a competitive chip. Although, haven't we been told again and again that the barrier to entry is massive and that the expertise is really significant?
Tim Bradshaw had this in the FT last week, and we some great work here. I thought Mark Bergen last hour was great as well with Bloomberg in London. And the basic idea is Microsoft's working on 2 chips. I'm speaking as an amateur. There's no quiz on this, I hope, tomorrow. But they're inventing 2 chips that are not NVIDIA killers, but will allow them, like everybody else, to compete with NVIDIA. And what you need to do here, as we mentioned in the last hour, you've got to hire the talent. That's what Sam Altman does. End of discussion. That's his skill set.
That apparently is what Satya Nadella does as well, and that's what he's done in the last 24 hours. If you look at things, the earnings report that comes from NVIDIA tomorrow, huge for this market, Tom, massive. If you think about what it did to this equity market when it came out with that revolutionary quarter. Do you remember that? We all thought it was too soon to monetize AI, and then bang, NVIDIA out with a massive forecast.
Or Meta, I nailed that as well. Facebook, I mean, just the same idea. And everybody's like, oh, this has to change. We're going to switch. We're going to have rotation, And I'm like, what if it just
carries on?
I'll steal that. It's very British. Carries on.
Carries on.
Carries on.
Usual suspects. Meta up by 178% year to date. Then the surprise. Number 3 on the S&P 500 year to date. Would you have guessed this, Tom? Royal Caribbean Cruises at 113% on the year so far. That is not a name I would have picked.
Team coverage, Symphony of the Sea. Ferro with hands-on reporting with that. Remember that, Lisa? We got the email from John where he could see the port and the starboard
He was
through his room. It was that,
He
it's
never
like
left
one of those
his room.
townhouses on 63rd Street.
Precisely.
He
if
never
I went on a cruise,
100%.
I'd probably stay in the room.
He'd be in there with some kind of,
Probably. Equities on the S&P look like this. Here are your scores to kick off the trading week. We're positive 0.1%. We can round that up. Yields are up by 4 basis points, Lisa. 447.64.
There's a bond auction today. I am watching it. at 1 p.m., the U.S. Treasury is selling $16 billion of 20-year bonds in a quiet week, destined for some excitement. Tomorrow, NVIDIA reporting earnings after the bell. Key to see if they give another blockbuster projection going forward of what they expect from earnings. And this week, on the economic front, we do get FOMC meeting minutes tomorrow. Are they really going to try to make it sound more hawkish to try to damp down some of the expectation for a soft landing? I don't know. Initial jobless claims, as you've been mentioning, the key economic indicator coming out on Wednesday before the Thursday holiday. The economic surprise index in the U.S. has been rolling over, but it's not anything negative. It's sort of at this sort of soft landing-ish look. Does it roll over further, though? That's really what I'm watching.
I'll be really focused on those global PMIs on Thursday. So focused on that.
Yeah,
when they
are you?
Not at all. Mark Hafley joins us now, CIO of UBS Global Wealth Management. Bro, I'm not saying they're not important. They are.
I know. You're going to be checked out.
Totally checked out on Thursday. Mark, good to see you. Looking at your forecast, your outlook for 2024, we're at 4,500 right now in the S&P. You've got softish landing for the economy, but very limited upside in the equity market, 4,700, Mark. Can you help us understand that?
Yeah, I think there's a couple of things. First, we do prefer bonds to stocks because we think that interest rates are going to move lower, and that'll help the bonds. On the stock side, we're in a new world, and I'm not sure you necessarily want to focus just on the S&P 500. I think in both bonds and stocks for next year, we're looking for quality. We're looking for those companies that get that high return on invested capital. And so, you were talking about the tech, and we recently, about 2 weeks ago, upgraded the U.S. tech sector again, in part because that's where we're finding quality. And there certainly is, over the longer term, this kind of big is going to do better theme that we want to play on.
This is really important, Mark. When you look at the income statement or the dynamics to cash flow and the balance sheet, what is it about tech? Where on the income statement will we see that reaffirmation of quality? Is it sales off nominal GDP or off their plan? Is it down the income statement, gross margin, or is it use of cash at the bottom?
Yeah, I think it starts at sales, even though a lot of these firms are becoming more consumer facing. One of the things that's changed so much about tech is you have more of these recurring revenue models in tech, which speaks to stabler earnings and earnings that can maybe grow as we get that slowing overall GDP growth. And then, of course, it flows from there down the income statement to produce more free cash flow.
I just think about this article talking about automated capitalism over the weekend, which is essentially the revenue streams that you're talking about for some of these tech names, like, for example, Apple and the Apple Store. You talk about how big is going to be better going forward, Mark. Does that mean that the Russell 2000 you can just basically leave for dead after one of the worst underperformances going back decades this year?
Well, look, we think that we're going to have a softish landing, and then I think in that scenario, some of the more dire predictions for what happens with the small caps and that they can't refinance and things, that goes away. So I'm not making a super dire prediction on small caps. I think the point is, where in the past you would think, oh, these large tech companies in AI can't keep growing. But what's so interesting, is that actually these firms that own such a large portion of the value chain now and get those insights that can train these AI models may have an enduring advantage despite the fact that they've been up so much this year. And so that's one of the reasons that we upgraded the U.S. tech a few weeks ago.
And are you leaning more into the AI names, right? I mean, tech is not all the same in terms of whether it's Apple or whether it's Microsoft. Are you bifurcating some of these bets, or are you just saying all of them are going to be winners regardless of their niche?
Well, I think there's a couple of slices at this depending on your time horizon. I think, over the longer term, one of the most exciting things is that the AI will broaden out, beyond the tech names and could potentially lead to certain disruptive companies having stronger margins. And so we're on the look for that. In the very short term, I think one of the things we're looking at is that actually, chips can do better here as well. So we're looking, say, beyond just software, but also at hardware at this time.
Mark, does this remind you of the internet boom? And do you see it playing out the same way in equity markets, that you get this sort of frenzy and then only a few win?
You know, I think about that a lot. I think that was somewhat different in the sense that, you know, what we're specifically talking about now is quality, and we're talking about free cash flow. And free cash flow was not what we were talking about in the internet boom. You know, that was about eyeballs. I'm old enough to have lived through it and make this comparison and force the team to look at this a lot. But I think we are finding some real differences.
I want to know what we're going to do with this wall of cash. Lawrence McDonald talks about it, one of my essays of 2023. And Mark, we all know there's a ton of money out there, but does it just sit like a lead brick, or does it actually finally get put to work?
Well, you know, we're urging our clients, and I think they're starting to understand that right now you can get these tremendous yields on cash, and so it's hard to move that cash. But as these rates start to come down, I think that will start to move this wall of money. And some of it can go into supporting the equity markets, and some of it can go into supporting the bond markets, and some of it can go into private investments and alternative investments as well. And that's why we think this is a great time to get your portfolio in balance back to what your asset allocation is, you know, and maybe forget about rates going negative again and really think about what does a proper asset allocation look like.
I think we all hope we don't go back there anytime soon. Mark, thank you, sir. Mark Haefely there of UBS Global Wealth Management with their outlook for 2024. Here's a top line from them. Softish landing, probability, they put it 60%, which I would say is pretty low conviction. S&P 500, 4,700 year end next year, not this year. The 10-year, 3.5% TK. The euro, 112 against the dollar.
Great scenario analysis. They're very productive. 72 pages is what I believe. I counted it with the UBS. I only read 3 of them, but you know, I got a 72-page outlook. And the answer is scenario analysis here, I think, is valid based on what any individual's belief is. My belief, and this goes to Lawrence McDonald's great essay, John, add up the wall of cash. I believe I saw a 13 trillion statistic. Don't quote me on that. But the wall of money out there, what happens? I don't know.
What's the opportunity cost of standing cash? TK, in 6 months' time, will you be happy you have dry powder, or upset with yourself for not locking in what's currently available further out along the curve? We can have that conversation later on today, but that's a question you've got to ask going into 2024. If you are just joining us, welcome to the program. Your S&P 500 looks like this. We are positive by 0.07%. Yield to higher by 4 basis points on a 10-year, 4.48. That is not what we saw last week. At least what we saw last week was yields aggressively lower off the back of this very tiny, small, as Tom would say, teens-weens downside surprise on the inflation report.
But just to pair that to what you're talking about, what will it take to unleash cash, right? I mean, if the yield gets down to 4.25% on cash, do suddenly people see perhaps a greater opportunity cost for not going into other assets? And this is sort of the interesting push-pull that people haven't established yet.
I like the way Mr. Haefely answered that. I mean, it's going to be marginally a little bit here and there. There will be excitable moments, which we'll talk about, but just deploying marginal cash. You know, I did the math today. When is Microsoft a $3 trillion company? It's a share price of like $4 per share. We're not that far from that. And that's that marginal cash coming in based on a belief.
That's a Dan Ives type call.
It is.
For sure.
You know, it's because the adults won.
The adults won, as he said, yeah. OpenAI was playing at the kids' poker table. Is that what Dan said? Something like that. You're going to hear so much
we're
of
going to
it
get in trouble
today. I know.
The three of us are just going to get in such
So we're going to wish the president a happy birthday. And the gift we've got is that NBC poll that Anne-Marie's going to break down for you next here in New York. From New York, good morning.
We are hopeful that we can get a significant number of hostages freed in the coming days. We're talking about pausing the fighting for a few days so we can get the hostages out.
But
it's not a ceasefire because we will continue to push against Hamas, but we are willing to go for a pause for a significant number of hostages if we have a deal
That's the latest out of Israel. That was Michael Herzog, the Israeli ambassador to the United States, speaking on ABC over the weekend on the state of hostage negotiations between Israel and Hamas. This story is starting to become a bigger and bigger issue for the President of the United States. The latest poll from NBC, another low for the President. Just 33% of all voters approve of Biden's handling of foreign policy, which is down 8 points from September. Tom, there is a very specific demographic that is worth looking at a little bit more closely. Among voters aged 18 to 34, in September, 46% of these voters said they approved of Biden's job performance. Now, Biden's approval rating has dropped to 31%, Tom, in that demographic, 18 to 34.
I'm benumbed by polls, but I like within the NBC reporting, Bill McInturf, who's an actual adult in polling, says this was a stunner. And I think that's the key thing, including within the margin of error, the former president beating him, granted, within the margin of error. But it was a stunner. Let's continue on this. And really a weekend brief as we were distracted by Silicon Valley soap operas and maybe what we're thinking about to the outlook. There's the outlook for the Biden administration on an 81st birthday. Anne-Marie Horton briefs us now, Bloomberg, Washington correspondent. What a weekend, Anne-Marie, and all of it wrapped around a birthday for the president. How will the president celebrate this 81st birthday?
He's pardoning a turkey, so he's getting ready for Thanksgiving. He has the whole rose garden, the turkeys come out. I mean, you know the spiel better than me. And then he's going to be going off to Nantucket to enjoy
Does the
Thanksgiving
turkey
with his
really
family.
take a room at the Hay Adams? Do they really do that?
I think so.
Yeah, I mean, I can see it happen.
And then for a nightcap at the, the bar underneath.
But
the
it's
Hay
like
Adams.
a politics from another time, and this coming up on the 60th remembrance of John F. Kennedy's assassination. That's all old school politics, and the president is part of that old school politics. How does an 81-year-old dude become new politics?
Well, his issue, the fact that his birthday is today, on the heels of this poll where 16 surveys have been conducted by NBC since 2019. This is the first time you see that Trump is beating Biden in this poll. It's within the margin of error, but also how low his polling number is. And to Jonathan's point, he has a real issue right now, and our Bloomberg Morning Consult poll showed that as well, with the youth. The youth does not like how he's handling this Israel-Hamas war. And this is where his poll numbers are starting to drip. And then one note about his birthday, I would say, in our poll, we have this open-ended question. You can write in what you think about candidates. And by and large, we have respondents continuing to write in that Biden is just too old. His age is a much bigger problem than, say, it is for the former president, even though Ron DeSantis this weekend on CNN said if Trump were to be president in his inauguration in January 2025, he'll be older than Biden was when Biden took that inauguration on his first term.
Any indication that the White House is beginning to take these polls seriously? Because they've shrugged a lot of them off. Are they changing?
Outwardly, they will shrug them off, and they'll say to you, we have 11 months left. Biden will always go up to you and say the polls have been wrong before. But internally, there's a lot of reporting that New York Times Siena poll really shook the White House. And you actually see a little bit of a rift happening with David Axelrod and the White House, who apparently called him a P-letter word. And Maureen Dowd wrote about this in the New York Times over the weekend because his urgent message to the White House and the campaign is potentially, you look at these poll numbers, maybe Biden needs to pass the baton on to a younger generation.
And so is there anyone that they're coalescing around to try to replace potentially President Biden?
No, Biden is still the lead Democrat when you look at poll after poll. There are people who are jumping in, like Dean Phillips in Minnesota, and he's coming out, and he's a Democrat who is bashing the administration on some of their handling of issues, but his big theme is that there needs to be a passing of the baton. But there's a number of governors, if you look around the United States, who could easily jump in. I mean, Biden joked about it at the APEC summit I was just at in San Francisco. He said, clearly, this guy wants my job. So he was talking about Gavin Newsom.
How much are we looking at a scenario where potentially he could see himself losing and then he can get somebody else? How much is this going to affect his policy as we head into later months of a very difficult war, both in Israel and Ukraine?
Well, I think you're already seeing it affect some policy, right? In the sense that you do see the administration really pushing for a hostage deal. They don't want to come out and talk about it verbally. My sources have told me that this deal has been on the table a number of times, but at the last minute, it gets ripped apart. If there was to be a hostage agreement and a pause in fighting, that could potentially help Biden in the polls, because the youth vote, Muslim Americans, do not want to continually see thousands of Palestinians die, and this is hurting his numbers. But Americans normally do not go and vote on foreign policy. Yeah. We have to remember we are still 11 months out from the election, even though it's poll after poll that is looking pretty dismal for the Joe Biden campaign.
So what is your ballet to January 23rd? I believe that's a New Hampshire primary. Maybe there's an Iowa caucus in the way. Do we go to Thanksgiving and ramp up, or do we go to Christmas and ramp up? Do we go to New Year's and ramp up? When's the Anne-Marie Horton ramp up?
Probably January, I would say.
January.
Yeah, I would say in January. Also, President Biden is spending this week with his family. I mean, he is running, but if there's any doubts that he wasn't going to run, it would be this week that he has that conversation with his family.
They do appear to be taking this age thing very seriously. The handlers around him are changing the way that he turns up to events. I even heard some reporting suggesting they're only going to allow him to make shorter walks. Have you heard these things as well?
Yeah, there was even a report that the Secret Service backstage at events are making sure they have flashlights out to make sure he doesn't ever trip. Also, we do know
that for me.
We do know that they also on Air Force One changed the steps to make them shorter and easier steps to climb and come down to help him if he's going to fall. They want to make sure that the president is safe at all times, but also that he isn't making a fool of himself. And that's why the age issue for Biden is such an issue, because you think about the fact that he has fallen, he has had a number of gaffes. So when you question, is he fit and is he too old, people remember these moments.
You're a great student of this. With Jimmy Carter and the Carter family and the death of his wife, how did we get to this gerontocracy? From where you sit with your great work, you're shockingly too young for this, but from where you sit at AMH, how did we get to this faith in ancient people?
I don't know, because you see it in the White House and you see it in Congress. It is not just...
It's everywhere.
It's everywhere.
Why?
I think there's a few reasons why. It is very expensive and difficult to run for office, and you don't make a lot of money when you're in office. So you either have to be older and have accumulated some wealth in the private sector. Also, I think a lot of young people are just over it. They're apathetic. They're not in the fight the same way you see some of these old timers.
Final question. What's a P-letter word? Everyone wants to know.
It was a prick.
Okay, all right. I think we're allowed to say that. Can we say that?
I just thought it was rude for Monday morning.
Like a pinprick.
Sure, that's exactly what it
That's
means.
what it means.
I couldn't think. I even Googled what is a P-letter.
Bravo to the rescue.
Also, this is not my reporting. This is reports out there, Politico, New York Times, but that's apparently what Biden called David Axelrod.
Oh, right. So he got angry.
At David Axelrod for calling for other people to potentially...
Because I've heard reports about
and for them to
angry.
take these polls seriously.
Apparently he does get angry.
Has he ever gotten angry at you?
Yeah.
No.
No.
Oh, okay.
Apparently he gets angry. You've seen those
Oh,
reports
no,
before?
no,
Yeah.
no, there's been a lot of
he has a
reports.
temper.
Has a temper.
I don't.
Okay. Not at all. You don't have a temper. No. AMH, thank you. It's good to see you. Great to have you in New York. Thank you very much. Yeah. Equities on the S&P shaping up as follows. Futures unchanged here in the equity market. TK. In the FX market, 109.25 on a euro, positive here by 0.1%. The dollar with the worst week going back to July. We're going to catch up with Jane Foley of Rabobank on foreign exchange in just a moment on this dollar weakness, Lisa, off the back of this bond market move.
We've actually seen some real breakouts and new levels on the euro. It's been so exciting.
109.
It's not even 106.
We actually moved
That's
one
exactly
big
how
figure.
I feel. It's just amazing. We're not just talking about the same figure again and again. It's pretty scintillating.
109.26. Bramo excited about the week ahead.
Yeah,
Thanksgiving just around the corner.
Yeah, it's great. You know.
Lisa's heart is warmed.
Pilgrims came over to the colonies. You know, it's great.
You could do bedtime stories.
Yeah. The pharaohs were on the Mayflower.
Were we? I'd just like to apologise for Anne-Marie's language in the last 10 minutes or so.
Come on.
Just Absolutely dreadful. Not what I expected from Anne-Marie Hordern.
Okay, you just totally baited her.
Bramo, stop.
Oh my God.
We expect better.
What is that word? Tell us. Please.
We have higher standards here, okay? She may or may not be back tomorrow. Equity futures on the S&P 500 just about unchanged, going nowhere. On the Nasdaq up 0.1%. 3 weeks of gains on the S&P 500. 4 days of gains going into a shortened trading week because of the Thanksgiving holiday, Tom. Tons of data, though. Looking out for jobless claims. I believe
we loaded up on Wednesday. Yeah, we do like 3 days of data on Wednesday. Back to Anne-Marie, and I think this really shows up.
Don't let it go.
Keep the generational gap. No. The people that are migrating away from conventional American politics aren't worried about the niceties of former media days. They're weaned on YouTube, TikTok, all the articles over the weekend about the TikTok generation and politics, and there's no language barriers there.
No, the language of politics has changed.
Yeah.
The language of politics. And I don't think it's just down to social media. It's the politicians in the seats, Tom, that have changed the way
reacting to
they speak.
trying to garner that youth vote. And it's not like you went to Madison, Wisconsin and picked up the University of Wisconsin liberal vote. It's a broader thing. It's a more Latino thing. It's a what is the youth of America going to do here? And critically, are they going to show up at the voting booth?
Well, I don't know anything about what you've just said. What I say is this, just to go a bit deeper. This is about being anti-establishment, going against the incumbent, and using a language that's not typically associated with modern-day politics. This is now modern-day politics. And I would stress this, Bramo, just for example, look at what's just happened in Argentina. Look at how that listener, look at how that leader addresses the electorate, talks about the establishment, the incumbent, and this is the change we're seeing, at least in global politics.
And it's too complicated for me to understand all in one swoop, whether it's a lack of understanding nuance, whether it's the way that things are covered, whether it's the ability for people to be honest and then have their proposals analyzed in real terms. But that's what breaks through. That kind of discussion. Let's just get rid of it all and start over.
Rip it all up.
Rip it all up. Get away from the education industry.
Exactly. Shut down the central
everything.
bank. Get rid
Forget
of the peso.
it.
Restart. Nothing's working. Start again.
We call that Liz Truss, right? Was that? But John, seriously, was that the Liz Truss approach?
Well, what's funny is Liz Truss wanted tax cuts, and apparently this government is now considering tax cuts going into the new year. So,
I mean, there it is.
Let's not do UK politics. That's another level of crazy that I don't really want to talk about this morning.
Okay.
That's the score in the financial market right now. Futures just about unchanged. Going off on a bit of a tangent about establishment politics. Let's get to your top stories this morning. Under surveillance this morning, Israel and Hamas working on a deal to release a large group of hostages, according to US officials. Axios reporting the deal would allow more than 50 women and children to be released in exchange for a pause in Israeli military attacks and, Lisa, a release of some Palestinians held in jail. The Israeli offensive now pushing farther south into Gaza with the possibility of more troops.
It does seem like maybe there is some deal getting closer with respect to a hostage release, and how much of this is because, in part, Israel is coming under so much pressure for additional pauses that maybe they've made enough progress to be able to do that at the same time as appeasing some of the at-home unrest as a result of the lack of focus on the hostages. Honestly, we're going to be focusing increasingly on what happens after.
Oh, without a doubt. More still to come. This is a developing story through the weekend and into this morning. Your next story, this developing from Friday. OpenAI co-founder Sam Altman joining Microsoft after a surprise firing before the weekend. Altman was ousted by the board of OpenAI, claiming he had, quote, lost the trust of the board of directors. The move sent shockwaves through the AI industry and Microsoft, a major investor in the company and supporter of Sam Altman. Microsoft CEO Satya Nadella saying Altman and Greg Brockman, who quit the board around the same time, will lead a new in-house AI development team. The takeaway, the conclusion for so many people trying to follow this story, Lisa, is Microsoft won. Microsoft won.
And we'll keep on winning. And this is really the key question. What's going to stop them from the winner takes all? And we heard there from Mark Heffley. Essentially, he's betting on the big tech names because they are going to be dominant. The big is better kind of theme is going to continue. It's going to raise a lot of questions, how we're going to rearrange not just tech leadership, but also kind of our economy.
Microsoft winning, hard to say the same thing about Twitter. Elon Musk defending himself amid rising accusations of anti-Semitism. Musk posting this on X saying, quote, This past week, there were hundreds of bogus media stories claiming that I am anti-Semitic. Nothing could be further from the truth. I wish only the best for humanity and a prosperous and exciting future for all. A growing list of advertisers have pulled their spending after Musk endorsed an anti-Semitic post just last week. Tom, this has been building. There were some reports that Linda Yaccarino has been under pressure to
you wonder what she's going to do.
Apparently staying gone.
Well,
this one's ongoing.
At the speed of Sam Altman, we'll see what Ms. Yaccarino will do. What I would focus on is this morning, there was some fleece thing for sale on Twitter. I happened to go over and Google it, and all over Google, the thing is a total scam running through the Twitter, saying that's the allegations that whatever it was coming through Twitter is a scam. And the bots and the sex bots are exhausting. Twitter's become a garbage feed for me. That's a fact.
Well, this was a problem before he took over.
Before
it was
the
something
Nazi
that he was
thing and all
hoping
that.
to address, and Tom, seemingly based on the user experience, difficult to say it has been.
It's much worse. It's embarrassing. I'd be embarrassed if my kids were on Twitter. I mean, it's just that simple. There's no other way to put it. We're going to have Bramo bring in Jane Foley here. Bramo is beyond excited that we've had a one big figure move in selected foreign exchange. So we sort of snoozed off with Jane Foley in London last time we saw her. Maybe we could do better. Why don't you bring in Jane here with big moves in foreign exchange?
Hold on a second. We did not fall asleep. It just seemed to be range bound, and now we've actually broken out to 109. The low that we got over the past couple of weeks was just a bit ago at 106.77. 104.67 on October 3rd. This has been a big move. Is it the beginning of something more, Jane Foley? That's really my question. Are we going to start to see more protracted dollar weakness?
Oh, this is, I think, really exciting, and I think we're at a really pivotal point. And of course, that started with the CPI data. And of course, right now we've got a question, well, is this a little bit overextended? But, one thing is for certain, that the dollar has a pretty good inverted relationship with risky assets. Say they're emerging market stocks. So basically what that says to us is that when interest rates in the US go down, well, risk appetite globally goes up and people move the money out of dollars. So we know that. What we don't know is if the market's got the timing right about, the interest rate cuts coming from the Federal Reserve next year. Are we going to get some pushback? Are we going to get more pushback about that, for the next few weeks? Is the data going to be a little bit more choppy? And I think that's probably what's going to happen. We will get some choppiness there. So we're probably not on a straight line, but it does appear that we are at a really pivotal point, which might just be a little bit more protracted than many people hope it's going to be.
Jane, with the multi-decades at Rabobank of hedging, is there a bet within this range-bound market that will allow for acceleration or convexity of moves? Is there an ability here to be surprised by big figure moves?
Well, there's always an ability to be surprised, and we've seen a lot of them now. But we know that these central banks are data dependent, and therefore, we don't get the forward guidance. Therefore, perhaps there's more scope to be surprised by all of this. And of course, you mentioned the elections. There's a huge amount of elections in 2024. I mean, I think there's a figure like I think countries with a collective population of more than 4 billion, half of the world's population will go to the polls next year. So it's not just the US. We've got elections in the EU and Taiwan and so many really pivotal places. So there's a lot of scope, I think, for excitement to be injected into the price.
Okay, well, I love this. Jane, give me a big figure move. Give me your pair where I can make a Bramo-like 5-6 big figure move into June of next year.
I think you probably look at the Swedish krona for one. That's just started to turn around. That had a huge amount of weakness streak for the last couple of years. That's beginning to turn around. I think we
krona against what?
Coming back, even against the euro. If we look at the Aussie dollar, if the risk appetite does pick up, and of course that's the big if, it will eventually. But this could be a protractive time of the market, trying to pick out and maybe knocks back from data, knock back from the Fed. But perhaps if we go, towards the latter half of next year, I think the Aussie will do really quite well because the fundamentals in Australia are really quite good compared with many other countries in the G10. But of course, that necessitates a pickup in China too. So, China is going to be a really important part of this risk appetite story and how it emerges in 2024.
But Lisa, that's right where I wanted to go, which is Aussie off Pacific Rim going north. I don't know who you play, Aussie, Sing Dollar, Aussie, China. I'll leave that to adults like Jane Foley. But to me, Australia always has a modest surprise here. Plus, they wanted cricket. They beat Satya Nadella's India. So, if they're long cricket, you go long Aussie.
I'll leave you to the cricket updates, but just sticking with the Pacific Rim, there is a question, if you want a real big surprise, maybe Japan is the way to go. And that's what PIMCO is doing, going into the yen, expecting that maybe a bit of softening in the stance of the Fed and even rate cuts sort of gives an opening to a move away from yield curve control. Are you buying that?
You know, I think it will happen, but I'm still not too excited about the pace. Yes, I mean, I think the real story for 2024 will be, yes, more unwinding of yield curve control, but it's when are they going to be able to hike interest rates? And I listened really carefully to the comments from Ueda just a couple of weeks ago. He's still really, very cautious. And then we had some very disappointing GDP data from Japan. And of course, that's what we need. If we had better growth in Japan, we'd all be a lot more confident that they can move away from negative interest rates. So we need to watch the economic data. And as long as that's sort of disappointing, I think it's still difficult to get too excited about the pace at which this unwinding will come. But we have started, or Japan has started the process of this unwind from, very accommodative monetary policy settings. What the question is how fast can they really go?
Jane, let's get away from G10. Let's go to something different. Finish on this. How does a country experiencing more than 100% inflation get rid of its currency and replace it with the US dollar? Jane, I'm sure you and the team have given this some thought. How's this going to work in Argentina if this is the road he wants to go down?
Well, I mean, that's what he said, dollarization, and I think what they probably do is probably just use the dollar a lot more in trade, price things in the dollar and just piggyback off the back of the Fed's much more credible interest rate ability. So it's just that piggybacking off the Fed as much as they possibly can. But this is not going to be an easy dynamic, as I think we're all aware.
There's going to be nothing easy about this. Jane, thank you. Jane Foley there of Rabobank. TK, how many times have we done this with Argentina? Back and forth, back and forth, back and forth.
And to that point, it's cultural.
Amazing.
I mean, I think it's an immense challenge for people in the IMF, which is very rules-based and agreement-based when they make these agreements. How do you make agreements with what we're all witnessing the last couple days?
The century bond. Remember that? If there was a poster child for the crazy times of the last 10 years predating the pandemic, Lisa, we often mention the Austrian century bond, but once upon a time that was somewhere you actually wanted to buy given the direction of rates. Just the idea of Argentina issuing a century bond.
It was funny at the time, given the fact that they had defaulted, 5 times before?
Yeah.
And it looks like we might be headed for number 6.
Yeah, I would point out also away from that is some constructive views, not a uniform opinion, but that Turkey may actually get this done under the wonderful economist Simsek, who came in and is trying to clean up
That's
the Erdogan
been a positive
mess.
turnaround for sure.
And there's some scenarios that adults have here of lira, I'm going to say going 28, 29, perhaps down to 23 or 24. That's very different from the Argentinian
But don't forget
dialogue.
this. I think it was Macri in the century bond. Macri was going to turn around Argentina. This was the establishment view at the time.
The elite view.
What happened? Yeah. And here we are sitting here and people are saying this guy's going to destroy Argentina. That's the establishment view. Tom, it seems to me that nothing works in Argentina.
As I said, it's a culture, this is dangerous ground for me, but with great respect to the Argentinian people, there's some real question about they have their own rule book they play by. Is sort of maybe how they feel about it.
If you're just joining us, check out the scores of the equity market, just turning negative, just for a moment, down 0.04%. Yields turning higher by 4 basis points, 447.64. We need to talk about politics and policy. We'll do that with Terry Haynes of Pangea Policy. We'll catch up with him in about 30 minutes' time off the back of that dreadful poll. Another one, Lisa, for the President of the United States.
Which raises this question, are they going to really take it seriously at a certain point? And the whole David Axelrod sort of tit for tat was really interesting because this was someone who supported President Biden in a massive way when he was vice president, has talked extensively about his connection, and he's basically saying you got to pay attention. These polls matter. They actually do hold a significant message.
And there's a history, I've mentioned this to Terry Haynes before, of sitting on the couch when LBJ stepped aside, and I don't remember the ferment before he stepped aside, but his polling and the tone with the American people off Vietnam was grim. Is this any different, frankly?
A conversation on OpenAI and the big win in many people's minds for Microsoft. Mandeb Singh of Bloomberg Intelligence on that company in just a moment. Microsoft up in early trading by 1.4%.
How would you describe your relationship with Satya Nadella, how much control they have? You know, I've heard people say, you know, Microsoft's just going to buy OpenAI. You're just making big tech bigger.
Company's not for sale. I don't know how to be more clear than that. We have a great relationship with them. I think it's that these like big major partnerships between tech companies usually don't work. This is an example of it working really well.
It's such a fascinating exchange. Looking back, the former OpenAI CEO Sam Altman speaking to Bloomberg's Emily Chang earlier this year. Altman now ousted from the company late Friday. He will join Microsoft to lead a new AI development team. Tom, what a turnaround. The face he pulls when Emily starts asking him about Microsoft maybe eventually running OpenAI, like no chance that's going to happen. This relationship's great. It's great for him and Microsoft. It's broken down between OpenAI and Microsoft, you'd have to say, Tom, after the weekend.
It's moving at real time, and without getting into the soap opera, and frankly, I don't understand it all. It was an incredibly naive nonprofit board made up of essentially non-professionals and one legit computer guy who sort of joined the dark side, if you will, versus people that can constrain and hire engineers and keep them happy while they work.
There's an uncomfortable tension right now in Silicon Valley, it feels like, between idealism and capitalism. And OpenAI has been talking ideals. You know, there's a lot of effective altruism of SBF, Sam Bankman-Fried, that you kind of heard going through some of these same people, and talking about nonprofit, bettering humanity. And now we're talking about nuts and bolts, massive profits. How do you pair those two with controls to make sure that it doesn't become dangerous or problematic in some sort of bigger way? Unclear. It's moving faster than any regulators and moving faster than many of these founders really can get a handle on.
Theranos, Elizabeth Holmes.
Yes.
The same thing. Whenever I hear stuff like this, Tom, radar's up. Radar's up
big time, and that's the generation.
Maybe that's just
shift.
super cynical of me. I
empathize, believe it or not.
I just don't buy it. Just don't buy it.
Well, right now, we're going to dive into this. This is really important, and I'm going to give you a little bit of visibility here. There are people like Mandeep Singh and our Anurag Rana who actually walk in offices, sit down at desks, and work. Their hallmark, their guidepost, is a guy named David Cutler. Dave Cutler was legendary at Digital Equipment DEC years ago in Maynard, Massachusetts. They stole him to the west coast of Microsoft. He was one of the founding forces behind something we all do, Windows NT. Mandeep Singh joins us now and knows Dave Cutler, the giant of Microsoft programming. This is about Dave Cutler's. All this is about is this kid Altman can bring the meat over to Microsoft.
Look, I think in this case, it sounds like the CEO was too overconfident and didn't really talk to his executives and, the board. And you come to a point where he was making all the decisions about the future of the company. And look, there's no doubt the market is real. I don't think, you can compare it to a Theranos or one of the hypes here because there are so many other competing companies that are trying to do the same. The CEO really wanted to move fast in this case, right? And clearly, the board and the executives weren't, in line with.
There will be 40 phone calls made today. Mr. Altman, Brockman, I believe it is, who's joining him, is well. What are the attributes they will use to sell a given really super byte, first in their class, and everything? One of these whiz kids. What are the attributes they sell to say join us at Microsoft?
Well, so clearly Microsoft is the compute infrastructure that's powering all the OpenAI LLM development.
Yeah, but what are they doing? Come on, stock options? Is it Mariners tickets? What gets these guys to move their slide rule over to Microsoft?
I mean, that could be an exit, but I can't imagine Microsoft really going out of the way to attract talent. Look, they hired Sam Altman, and they will leave it on him to figure out which of the engineers really he wants on his team at Microsoft and how to get there.
How much do they make a year?
Well, we're talking about over $1 million for all of these engineers. So clearly, yeah, that's...
Why is this guy so important?
So he was the face of OpenAI, and think of ChatGPT as the verb when it comes to generative AI. That's why it got so much traction, and he was the face of the company. But clearly, there were a lot of engineers behind the scenes that were part of the development, and they weren't on board with his approach. They had concerns around AI safety, and that's one thing that I think everyone needs to think about in terms of the roadmap for when this technology will be deployed. There is a lot going on in terms of developing it, but in terms of really changing your production environments with generative AI, it could be a few years, and that's where I think not everyone was in sync.
If they were more concerned about safety on Friday, are they more or less concerned this morning? Now he's at Microsoft.
Well, so clearly the talent loss is a big concern, and that's where the board got it wrong, the way they went about it. And clearly, I mean, from all we know, OpenAI could lose almost half of its value just because of the fact that they lost the CEO.
But does it raise a question about policing of some of these developments at a place that is focused just on making money, the bottom line, and when expectations are pretty high in the market?
Well, so look at the development of, ChatGPT and all these large language models. It's pretty expensive. And for any startup to sustain themselves, right now we are talking about, billion-dollar R&D budgets. So how do you sustain it? So I don't blame, Sam Altman for trying to be ahead in terms of monetization and thinking about it, but not having your executives on board about your thinking or your board, I think that's where he got it wrong.
Well, but I guess that I'm wondering from a humanity standpoint, if we're going to go with some of the ideals that they're talking about and the fact that the board was concerned about bots that could kind of take on a life of their own and give all sorts of information online. We're already seeing some sort of emblems of that. How much does that just get magnified with a move to Microsoft that doesn't necessarily have a nonprofit board trying to espouse these values?
Yeah, and look, the Google approach so far has been, they've been very protective about, what they release. So they have been very conservative. A lot of people have actually blamed them for being slow and not releasing their Gemini large language model. But this sort of validates the Google approach, that you have to take a measured approach when it comes to releasing these models, whether it's open source or proprietary. I think we know OpenAI was, even though it's a nonprofit, everything is proprietary. Well, I think this brings into focus what should be open source and what can the community work on it collectively. And I think that's on the table now that Sam is moving to Microsoft. I wouldn't be surprised if they go with an open source approach, because Satya Nadella's focus has always been on embracing open source since the time he took the helm.
We've had this conversation already a few times this morning. Let's finish there. We've reported that Sam Altman was trying to create some kind of rival to NVIDIA. How seriously should we take that now? He's got a seat at Microsoft.
I mean, Microsoft announced a new chip of their own last week, right? So clearly, Microsoft also has ambitions in terms of developing their chip, but at this point of time, I mean, now they have to think about what is the IP that Sam can create over the next 6 months. Can he develop a large language model that's equivalent to ChatGPT in the next 6 months? Because it's proprietary. That's not coming over. Even if he hires the engineers have to build it from scratch. And data availability is in shortage. They can't get the same amount of data that they had before.
A tough question. Microsoft's up about 1% or so in the pre-market. If OpenAI was trading in the pre-market, where would it be right now?
I mean, at least 50% down.
You think that hard?
Yes, because now their IP is gone. I mean, especially with Sam coming over this side, Microsoft has to redo everything from scratch unless the board resigns and Microsoft ends up acquiring OpenAI. That's a plausible scenario, but if they have to build it from scratch, now we're talking about a very long timeline. I mean, Google is clearly ahead in terms of developing their model.
So everyone's saying that Microsoft has won, but if they've got to write down that stack by 50%, have they won?
Well, so, I think talent acquisition is one thing. I do think when it comes to large language models, I mean, there are a couple of open source large language models, but you could use that to build yours on top of it. I don't think, you can replicate what ChatGPT had. Again, I go back to the verb analogy because everyone thought about, generative AI and ChatGPT as synonymous.
Mandeep, thank you, sir, for the update. Mandeep Singh of Bloomberg Intelligence. Gripping stuff over the weekend, Lisa. Everywhere I looked, Twitter, any news site, Wall Street Journal, Financial Times, an obsession with this story since Friday evening.
It's been the obsession of the stock market. If you take a look at the gains, it's been the obsession of anyone who mentions AI. That's the new, blockchain. You say AI and your stock pops 10%.
Do you remember that blockchain, iced tea, Long Island iced tea?
Yes, that one.
Blockchain.
Yeah, I remember. Overstock the blockchain.
Was that 2018?
Something like that. It feels like a really long time ago.
It was a long time ago, TK. The frenzy around blockchain.
There was a frenzy this weekend. It's conflating the social of this and the hagiography of this with like actual substance, like we just heard from Mandeep Singh.
Mandeep, thank you. It's good to see you. We'll catch up with you later. Keith Lerner of Truist is joining us shortly. Your equity market right now turning just a touch negative. We're down 0.06% on the S&P 500 from New York. Good morning.
I think we're in the early stages of a classic year-end rally.
The resilience of the functioning of the market has really impressed me.
I think we're seeing huge pro-cyclicality in pricing in capital markets.
We're going to see moderate gains in the equity market in the coming 12 months.
The equity market has hit an all-time high each of the last 5 times that the Fed has paused. We think this rally has legs.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene on radio, on television. We welcome all of you to Bloomberg Surveillance. It's a holiday-lengthened work week. Where will we be Wednesday? We'll be over the river and through the woods with some economic data, and maybe Sam Altman will already be through training at Microsoft.
And a pumpkin pie. That would be a wonderful
Pumpkin
thing,
pie.
won't it? Yeah.
That's
We'll have some
Halloween.
jobless claims data as well. You don't have pumpkin pie, thank you.
No, we have pumpkin pie. Yes, we do.
I've bought you one before for Thanksgiving.
Although usually the way I cook is like I go to a restaurant.
I've done that with you too on Thanksgiving. I've experienced that as well.
very-
Jobless claims comes on Wednesday before we get Thanksgiving.
Everything's on Wednesday.
Thursday. Claims, I think, is really, really important. So if you have confidence that yields are going to fall from here, how much confidence do you have that equities rally off the back of it? And another way of framing that question, I think, and it's a question we'll ask all week, when you look at jobless claims and they start to creep a little bit higher, what's the difference? How big is the gap between a welcome loosening of the labour market and an unwelcome deterioration of the labour market, Tom? How close are we to that conversation changing?
I'll have to look at the chart, and I look at the 4-week moving average there, and there's other things like durable goods we can moving average out. But to me, it's just a data-dependent Fed, and there's like 8 narratives out there. And Lisa, the narrative this morning is simple. There's a pullback at 4.902 year yield, Lisa. Is anyone modeling that we revisit 5% on the 2-year yield? I don't think that's out there here in Happy Land.
All I'm seeing right now is actually stability. And we saw that at the end of last week and then this week. 4 basis points is bupkis, right? That's nothing if you take a look at what we've seen over the past couple of weeks when you look at yield moves. But to the key question, when does it shift? When do we get another narrative shift from soft landing to something that's a little bit more pernicious? I don't know the answer, right? I mean, this has been a very difficult moment to call when it comes to the narratives that people cling to on any given day. What will be the trigger point for people to suddenly feel bad? I don't know. I mean, I'm no expert on this. I'm always sort of, cynical, which is not necessarily a good thing. And on the holiday season, why should anyone feel cynical?
They used to change every month.
Yes, exactly.
They change now every couple of days. Last week was a classic example of that. To see that small downside surprise on CPI on Tuesday, soft landing Nirvana. Neil Dutter's words over at Renmac. A few days later, we're talking about Walmart, goods deflation, and the prospect, Tom, of a hard landing.
You nail it in that there's all these disparate narratives. We're going to talk to Keith Lerner about this in a minute, the confusion of year-end outlooks and that. And the fundamental issue is Mr. Dutter's original insight that if inflation comes down, teens-weens a little bit, whatever, that real incomes go up. Are we a more beneficial nation with higher salaries because inflation's coming down?
My follow-up question would be as follows, Tom. Show me your unemployment forecast.
Yeah.
You're going to show me your inflation forecast and what you think the Fed's going to do. Show me your unemployment forecast, which, by the way, makes it tremendously difficult to really project this election, Tom, 12 months from now. Where's this economy going to be in 12 months if we don't really know where it's going to be 1 month, 2 months, 3 months from now?
We're getting to the point, as AMH said, that we're getting the politics to intrude. And Lisa, I guess AMH is right. January sort of kicks that off, but January is not that far away all of a sudden.
I know. And so what is the narrative going to be? And how do you sort of craft a message around
Do we know who the
that
candidates will be?
shifting?
It's assumed Biden, Trump.
I don't think we
Happy birthday, Mr. President.
That might change. That might
That
change.
might change.
Just remember how 2023 started. January, soft landing, right? But we're going to
Right.
get a recession, but softish, whatever that means. February, no landing. March, banks start to collapse.
Yeah.
Banks fail. We're talking hard landing. And then by the end of the summer, what are we talking about? Coming into Q3, Q4.
Goldilocks.
Q3 had GDP growth close to 5%. Yeah, what's that?
Fastest growth in 2 years.
Let's start the data check here. 1 year trailing, Dow up 4%, underperforming. It's only a 14% up year for SPX. NASDAQ 100 up 26%.
There you go.
It's my data check for the morning.
That wasn't consensus at the start of the year, let's put it that way. Equity futures slightly negative this morning. We're down 0.05%. No drama there. In the bond market, yields aggressively lower last week, down by more than 20 basis points to a September low on the 10-year yield. This morning, higher by 3 or 4 basis points, 447.25. Something that does stick, dollar weakness. The euro, 109.30. The euro against the dollar positive by 0.1%. Worst week for the dollar index, Tom, since the summer.
Worth watching. Thank you, Jane Foley, for perspective here from Rabobank London here moments ago. Right now, let's get started. Keith Lerner joins us, co-CIO, Chief Market Strategist, Truist Advisory Services. Keith, there are a set of narratives out there. We have to do something with what we have. We have to asset allocate. We have to believe in a strategy. Is there any belief out there in a strategy, or are we going to make it up week by week?
Yeah. Hey, well, great to be with you. There are a lot of cross currents, which is creating all these different narratives. And I think at this point right now, it's not a time necessarily to be either, aggressively on offense or defense. We've been joking around in this program that we were aggressively neutral or strongly neutral. But I will say at the end of October, when we hit 4,100, we said that was a buying opportunity. And I still think there's some left in the tank here before year end after some digestion of these big gains we've seen the past few weeks. But Tom, I think it's going to continue this way early into next year, that we're going to have this broader, choppy range, and that narrative will shift from day to day, week to week. And I think from our standpoint, I think there'll be more tactical opportunities like we just saw when things get, too far one way to the upside or downside.
So, Keith, this raises a question for a lot of people in cash. A lot of people listening to this program right now are sitting in cash, 5% yield, all that good stuff. Keith, in 6 months' time, are they happy they've got dry powder, or regretful they didn't go further out along the curve and lock in what's available now for longer?
Yeah, well, listen, I think, we've gone from 5% to 440, so it's a little bit more challenging than at 5. But I do think that people will be happy to use pullbacks to invest. And basically, if you think about this, everyone loves 5% until the market moves up 10% in a week, until semiconductors are up 18%. So our message is use those tactical opportunities, because we think the opportunity to have above 5% gains will happen. The other thing with that statement, Jonathan, is if you look back historically, I know the reset has been very strong, but we went back to 1950. The average 10-year yield has been around 6%. The average cash yield has been around 5%. And the average S&P return has been around 11%. So I think that automatically that 5% is the best place to be just in cash is probably overstated.
Although the time was very different back then in terms of valuations and where they were after decades of zero rates. I am wondering if basically what you're saying is you can get better than 5% in big tech. Is that what you're saying, especially with all of this AI discussion that we've been having over the past 6 to 12 months?
Yeah, we're overweight tech, we're overweight communications. Again, we just had a big gain, so we're expecting some consolidation. Obviously, the big number that's going to drive tech this week is going to be after the bell tomorrow with NVIDIA. But I still think at this point, tech is leadership. It was the last to come down. It came back the strongest. And what's notable is the technology sector just made an all-time high. And on a technical basis, it just made a 5-month high overall to the market. So the old leadership is the new leadership, which is still tech at this point.
Oh, well, I'm going to steal that, Keith. I've been looking for a phrase for next year. The old leadership is the new leadership. Do you think that that's royalty approved, don't you think?
How much do you want to pay for it?
It's huge. I mean, the royalty is a massive stream
$1 a
to
time.
Keith on that. Keith, why is that? Why are we not going to see breadth? Why is the old leadership the new leadership?
Tom, I don't know that we're not going to see it, but we're not seeing it yet. Everyone's trying to force a narrative on what they expect for the market. What we try to do is follow the weight of the evidence, right? And a couple of things we look at. We look at valuation, which is a condition, not a catalyst. We look at relative price trends, and we look at relative earning trends. Well, right now, obviously, tech is somewhat expensive, but the earning trends are still much stronger than the overall market as far as forward estimates relative to the overall market. Price trends are still positive. And, we can debate about how slow the economy is going to step down, but more likely the economy will likely slow down from where we've been, which is a strong point. And in that environment, I think investors will continue to gravitate towards these big, diverse, big balance sheet companies that have cash flow regardless. Now, listen, at some point, I'm looking at small caps at the lowest relative price since 2020, or the average stock. But I need more than that. I'm going to be patient, and that means I'm also going to miss the bottom or the top. But if we can get the meat of the move, that's really what we focus on. And again, I'm taking what the market's given us today.
Given everything you've just said, over the next month, 6 weeks, whatever's left of the year, Keith, is the fate of this equity market rally in the hands of the economic data or NVIDIA earnings after the bow tomorrow?
I think this week NVIDIA earnings, but I will say this, Jonathan, the way I look at it is we're having digestion. Just after you had a big Thanksgiving meal, you need some digestion. I think that's likely to happen this week. But before year end, I still think we'll have a little bit more of a push higher into year end, more based on positioning. There's a lot of managers that are underperforming this year still because of the mega cap names, and I think likely to see more positioning move to try to play some catch up before year end.
You mentioned indigestion, and we've been talking about the different narratives, and so I have to bring up this one headline that I saw this morning. Thanksgiving on Ozempic turns the feast into an afterthought.
I saw that.
Was Ozempic simply an afterthought? Is that going to be looked back as just the hype of 2023, or is that going to be a trend that we can kind of eat up next year?
Yeah, I think that trend is likely to continue. I think there's, dreadful. Yeah, well, I think that was pretty. I thought it was pretty good.
Thanks, I appreciate that.
Carry on, Keith.
Yeah, thank you. No, I don't think that trend's going to change. I mean, I think the one thing with some of these weight loss drugs, there's a lot of money in earnings that will flow to the drug companies and away from other areas. So I think we're still early innings. In fact, one of the analysts I listened to recently downgraded a stock for next year. One of these, I think it was Krispy Kreme, and the basis was that it's not even in the numbers yet. So if we start to see next year, I do believe that we'll start to see some impact on that. I don't think this is a 6-month story. I think it's a multi-year story that has some legs.
Keith, thank you, sir. Keith Lerner of Truist Advisory Services. I think about this so much, Bramo. I really do. This economy in America is leveraged to obesity. One of the pillars of this economy is obesity, and all of the economic trends that are built around it. Healthcare, food packaging, etc., etc. Now, we threw some mud at the usefulness of Twitter a little bit early this morning. I'll rephrase that. Tom threw some mud at the usefulness of Twitter early this morning. There are still some interesting thoughts out there. And one thought that I read was something that we haven't been talking about. What about pensions? What about retirements? If one of the biggest killers on the planet, particularly in the United States, is heart disease, and we're going to do something big about that and people live longer, what about the financial aspect, Lisa, of all of this? Never mind Krispy Kreme and food and all of that stuff.
It's a great point. Although on the flip side, you could say if people are healthier and they're not going to necessarily be getting dialysis twice a week, then maybe that's actually going to reduce some of the healthcare costs. But I take your point. The implications of people not necessarily having, a third of the public being obese in the U.S. or something insane, overweight at least.
Let's cut it down here. 529 calories for a slice of pumpkin pie. That's with the whipped cream or the ice cream on top. It grosses up at 300 and you cake it out at 5. But the problem is it's one slice of pie. And
how big is your slice?
Well, that's the point, Johnny. That's not that big a slice.
This is what we're talking about.
And the point here is there's people in America, not that I know them, that will have multiple slices of pumpkin pie. You have 3 pieces of pumpkin pie, with a drambuie on the side, and you're out to 1,500, 2,000 calories, boom, just like that.
This feels personal. If you just join in, welcome. Equity futures negative 0.05%. Yields a little bit higher, up 4 basis points, 447.45 on a 10-year. Do you have that much pie on Thanksgiving?
Never. Actually, pecan is where I
pecan is where you go.
Yeah, do they have pecan pie in England?
Sweet,
they do.
You
have mince pie.
Yeah, pink.
We get
I like
2,
mince.
Pumpkin, and you say pecan, right?
Yeah. My grandmother, it's all
pecan.
Oh, pecan.
What can I say? I've been waiting for this.
Never, ever use blackstrap molasses to make pumpkin pie. That's it.
Okay.
That's the pro tip.
Yeah, pro tip there for your cookies. We're going to do meatloaf.
Have you made a mistake with that?
In the 9 o'clock hour with John Farrow, we're doing meatloaf.
I think I did some gingerbread snaps with that.
Yeah,
it worked out.
It worked. Yeah. Gingerbread is better than pumpkin. It overwhelms the pumpkin.
Okay.
It makes it very unrecognizable.
Did you try and make this last year?
Theoretically, it's happened to some people in my orbit.
It's her cookbook. It's coming out next year.
Amazing.
Down in Flames.
Down in Flames. That is
Down in Flames.
Perfect.
Bramo
that is
cooks.
Perfect.
100%.
Equities on the S&P, just about negative from New York. This is Bloomberg.
The Federal Reserve, when they take those uncertainties down to the level of the monetary policy making body I work for, We are not certain about whether inflation is on track to return to 2%. We are unsure about the length of lags and whether they are behind us or still to be fully realized.
And for that reason, they keep talking about patience. That was Mary Daly, the San Francisco Fed president, speaking at the European Banking Congress over in Frankfurt. From New York City, back in America, welcome. Your equity market just about unchanged on the S&P 500. Yields are higher by 3 basis points, 446.66. And a quick snapshot of what's happening in the commodity market, because it's been a rough, tough couple of months all over the place. WTI back in the 70s, 77.40, and Brent crude just creeping back into the 80s over the last few sessions, Lisa, 82.33.
And there's some discussion about possibly further production cuts in Saudi Arabia at the monthly meeting of OPEC Plus. At a certain point, if this is demand driven, do you get a supply side response from some of the OPEC Plus members?
Is that what we're going to see? Cuts? JP Morgan and Malik over there on the London desk thinks we will. Christian Malik, Tom, thinks that OPEC Plus are going to make big cuts, anticipating the weakness in the economy that might be around the corner in 2024.
Okay, so that's one of the narratives we have here, and maybe that's the least predictable narrative that we have. I would say many of the narratives are migrating towards our uncertainty on oil, the microeconomics of what the stock market's going to do, what technology is going to do, what nominal GDP is going to do. To me, I don't even know where Atlanta GDP is right now, but to all of these things, John, are we any less confused than we were 12 months ago when you were saying, wait for the outlook till March?
No, I don't think we are at all. Tom, at the start of October, we have the terrorist attack in Israel. We're talking about maybe a conflict spreading through the region and crude's going off to the moon. Crude was down 11% in October. I keep going back to that. I say it a lot. We've all said it before. If you want to make a fool of someone, ask them for their forecast, Tom, on oil. And October made a fool out of everyone when it comes to the commodity market.
We're gonna have to see. Right now, can we do the foreignness of it all?
Sure.
I'd be honored to do this. I do this for my good friend, David Gura. There is no perception to what 1975 was. It was when a governor from Georgia wandered up north, delusional that he could actually win an election. At the same time, Ricky Skaggs, Tony Rice, Jerry Douglas, and others were doing a seminal album in bluegrass, J.D. Crowe in the New South, 1975. Terry Haynes remembers this. He remembers the shift of the Old South to the New South. In honor of the First Lady, Terry Haynes, what was the battle that the two Carters had when they invented the New South?
Well, the battle that went on was the idea, and this is middle Watergate, post Watergate, the idea that an insurgent could actually shake up Washington. I mean, that was the selling point for Carter. He managed to make that case. He won by a little over President Ford, but then he ran into the realities of Washington, where Tip O'Neill and others took him aside and said, no, actually, this is the time where we get to make the policy and you get to sign the bills. And what ended up happening was basically a 3-year Democratic food fight that weakened Carter greatly, not least because Ted Kennedy ran against him, and that ended in President Reagan's election.
Is this Democratic Party now any shade or idea of what the two Carters knew?
Yeah, some of them are, but I think that President Carter would likely be unhappy with the progressive direction, largely because, I mean, he would be aspirationally progressive, but the idea that, they couldn't win on a particular platform would not be helpful. And he'd see the politics, I think, very, very differently than the current group does.
Who do you think, Terry, is going to be the torchbearer for the Democratic Party in the next 4 to 8 years?
Beyond Biden, I mean, there's going to be a lot of people that are going to fight that out, from Governor Newsom to Governor Whitmer of Michigan. There will be 4 or 5 others that will try to pop up. It's going to be very interesting, the battle for the soul of the party. The problem is relevancy. What you've got on the left and on the right is a world where the primary system rewards purists And at the same time, the money out there, the money and the energy rewards purists as well. So there's a huge middle in the country that feels unserved on a lot of levels. And I think that's the basis of a lot of the tensions you see politically.
Do you think that's the reason why President Biden hasn't stepped down and allowed somebody else to run in his stead?
One reason, yeah. I mean, but, Democrats are, the old order never passes quietly, I think, historically. And what you've got is in Biden is, by and large, the old order, somebody who, got there on the promise of centrism, of a return to normality. And then what you've got instead is, the pull and tug between the centrists and the progressives. And, that's not the direction the Democratic Party's going in. They're going for good or ill in the progressive direction.
Terry Haynes, who's the Nikki Haley of the Democrats right now?
Oh, Nikki Haley, goodness. There isn't one on the radar screen. Everybody else who's thinking about running went independent. Whitner is probably the closest to that, but I don't think there's a close analog.
When you talk about President Biden and some of the poll numbers recently, I'm wondering, given the foreign policy consideration, how much is the lack of popularity going to drive some policy decisions on his part in the coming months? In other words, does it reduce his support of Israel and change any of his Middle East policy?
I don't think it changes on Israel. I think he gets a little bit tempted on China. The Chinese have been dangling a great deal that, if you'd be a little bit more reasonable on Taiwan, we'd work with you on the Middle East. We'd work with you on Russia, Ukraine much more overtly. And, so I think he's a little bit tempted in that direction. But, the way the White House sees this, and I was following your comments earlier, the way the White House sees this fundamentally is, it's a race against somebody, and they think that people will end up reluctantly pulling the lever, but actually pulling the lever as much to avoid the likely opposition as anything else.
Terry, do you think China would be happy with another Biden term?
Happy? Yeah, I think sure, because what China very likely sees is a lot of muddling through, a lot of pronouncements about new policies, chips, security, and the like, but not a lot of follow through. I mean, there's a headline on the South China Morning Post this morning saying, America's building all these chip factories, but the federal dollars haven't started to flow, which is true. And, that's been a year or more after the CHIPS bill was passed. One of the things that the United States has got in terms of a large problem is follow through, is procurement, is actually becoming the arsenal of democracy here at this particular point.
Terry, appreciate your insight. Thank you, sir. Terry Haynes there of Pangea Policy. Going into an election year, Tom, next year, China and the United States trying to just dial back things in the last week or so.
Well, they have. And you wonder what the next step is. And I would suggest one of the steps, and I'm going to defer to someone as competent as China Beige Book on this, Leland Miller. But I wonder if the surprise here is domestic consumption. Lisa, you mentioned this 2 hours ago. Maybe you do get some domestic consumption away from the collapse of investment in China. And I'm not talking about 7-8% GDP, but just, get it out to a 4.8 or a 5%, and maybe that's happy land.
I can't game out what's going to happen in China or even what's necessarily going on in China. I can say what was clear to me last week was that the leverage seemed to have shifted in a material way. There was a new tone. The acceptance of China, we talked about the dictator comment, it got completely lost. It was pushed away. It was irrelevant. China could have taken that up if they wanted to. They decided not to. It shows how much more maybe they need U.S. business interests, maybe, than they ever have before.
Got a standing ovation from corporate America, didn't he? Isn't that more important to him than whether he's called a dictator or not by the President of the United States?
Absolutely. Whether that standing ovation translates into dollars,
true.
It's a bigger, perhaps, their hurdle.
They all want to be there still, though, don't they? They want to see certain changes, but they all want to be there. They all want access to that market.
It's the world's second biggest market.
But over the weekend, Robin Brooks really led on this. It's not China-U.S., but maybe it's China stuff through Mexico, then the stuff from Mexico up to us. Have things really changed all that much from that pier across the Pacific path?
Coming up in the next hour on Bloomberg TV, Russ Kostrick of BlackRock, Brian Weinstein of Morgan Stanley, Nadia Lovell of UBS. That's your lineup going into the opening bell and coming out the other side. Equity futures on the S&P 500, totally unchanged. From New York, this is Bloomberg.
Bloomberg Surveillance on radio and television. Thank you for being with us on a Monday. What a weekend. Just many different narratives to talk about. We've really tried to check all the boxes this morning to get you ready for a holiday-lengthened work week. Right now, an important tweet out on OpenAI. Lisa and John, we're sort of like, okay, can we move on from the Silicon Valley soap opera? Except this tweet is important. Moments ago, truly one of the foundational engineers of AI, Ilya Sutskever, he is at OpenAI over the weekend. Within the simplicity of this, Lisa, it was him against Altman and the rest. He stayed with OpenAI. I deeply regret my participation in the board's actions. I never intended to harm OpenAI. I love everything we've built together, and I will do everything I can to reunite the company. To me, that's the driving news item since Mr. Nadella shocked us at 2 a.m.
Does this mean that Microsoft is going to buy OpenAI outright to unite the team, or does this mean that they're going to bring back people that they lost? Unclear. It is clear, though, that Microsoft was the one that seemed to win here, and right. OpenAI is left scrambling.
Look for Bloomberg Technology today to drive this. If they did like all-nighters, like for,
a long weekend for many people.
Long weekend, particularly to Ed Ludlow there, and we'll get much more on that through the morning as well. Microsoft with a lift here this morning. It was up 10 big figures, way out over record high. Microsoft has pulled that back a little bit in the last number of hours, but still 371. Not all that shabby. No, that's shabby as well as the work week of Michael McKee. After the Denver Broncos won by 1 point over the weekend, McKee's a happy guy, and he gets to a staggering Wednesday of economic data. Where will we be, Mike, Wednesday at 8:31 a.m.?
I'll be on holiday, but I don't know. That's going to be the interesting question. We've seen the yields across the curve fall for the last month, and particularly since the last Fed meeting, and then we had the jobs report and CPI. Do they change much this week? Probably not. This is the week that a lot of people go on holiday, particularly the senior bond traders will probably be gone on Wednesday and Friday. So do we get the kind of reaction we might ordinarily get? Don't know. Wednesday, we get jobless claims and durable goods orders. Those ordinarily would move the market somewhat. We'll see if there are going to be enough people trading to have an impact. And Tuesday, people are going to talk about it being the highlight of the week, the Fed minutes. Whether the Fed minutes answer the questions that people want to know the answer to, like how long you're going to keep rates high, is kind of unlikely, but it is going to be something the markets are going to pay a lot of attention to.
Oh, my God. Tom, have you ever heard a less excited Michael McKee try to give us the week ahead? This isn't going to matter. No one's going to be around to trade this. And this is going to happen. Let's see if they don't answer anything. To the Fed meeting minutes point, though, Mike, are we going to see some sort of pushback against this enthusiasm about a soft landing? That's sort of one of the speculations, that maybe we'll get some massaging of the minutes to that degree.
I'm not sure. Most of the Fed officials that have spoken since the last meeting have suggested that a soft landing is a possibility. They don't want to say it's going to happen because they don't want to be wrong, but they're beginning to think that it is a real possibility. I'm not sure there is anybody who's going to be saying it's less likely or that we're more likely to have a hard landing. Really, the question is going to be, do they need to raise rates again? Yeah. Because we have seen market rates fall somewhat, and we don't have that financial conditions tightening that we'd had before. So I think that's going to be the key question that people in the markets want to know.
So let's park that for a minute and just go to 1 p.m. today when we get that 20-year auction at a time of maybe thinner liquidity, at a time of a lot of volatility. How disruptive could it be?
It could be a little bit disruptive, more psychological than anything else, in that the 20 is not as liquid and deep as the other issues along the curve. But we had the issue with the 30-year last week tailing badly. And so is there a market for duration out there? And if so, what's the price? That's what people are going to be interested in. And we'll be looking at to see just before the auction where the when-issued price ends up, because are people going to start to make concessions to try to get this auction through much more smoothly?
Mike, we got to leave you, because if we don't, you're talking auction talk. Bram will be going to auctions here for the next 5-6 minutes. Michael McKee waiting for the 20-year auction. Is it today, Lisa?
1 p.m., $16 million.
1 p.m. McKee will be on bated breath for that. I'll be deep in the surveillance now. Joining us now to save the segment, Kathy Butch-Johnson joins us, Chief Economist, Nationwide Mutual Insurance. Kathy, if I take the movable feast of real GDP and some form of inflation expectation, what nominal GDP describes this idiotic phrase, soft landing? 4%, 5%, 3%? What animal spirit is a soft landing?
Good morning, Tom. Very good question. We do tend to focus on real GDP growth. I think soft landing for the Fed's view would be, getting growth below, 2% for some period of time. But then if you add inflation on top of that, you're looking at nominal growth that needs to slow probably, certainly below 5%, maybe even 4, around a 4% handle.
Is that feasible?
Oh, it's certainly feasible. I think we saw the real strong blow-off of consumer spending and activity over the summer. It did persist through September, but the October data are signaling, some real slowing and changing in employment dynamics, income, and also that's going to, and consumer spending. We got resale sales, and we'll see the consumer spending data next week, that we are seeing some slowing and moderation. And I think the question is, are we going to have a soft landing, hard landing? That's still there. But I think to the point you were talking about earlier, the question has shifted really to whether the Fed has to raise rates further. And if not, when do they start to cut rates and how quickly? That seems to be where the dialogue has shifted.
I am lost on this. How do they, quote unquote, raise rates into a 5% or lower nominal GDP? Dare I say it's 3.9% animal spirit. It's not in the textbooks, Kathy. You don't raise rates.
Well, we think they're done. And we would agree with you that if we're right and growth moderates, and really what we saw third quarter, nearly 5%, that was eye-popping. But inflation still continued to trend lower, right, even during that period. But I think that period was the revenge spending. It was, depleting the remaining part of the pandemic savings. And the labor market was very, very strong. It's still strong, but you're seeing some of the robustness kind of cool, or some of the heat cool in the labor market. I think they're going to hold it. And I actually think the market's moving in the right direction, in that by May or June, they'll be able to cut rates. It'll be very gradual. Typically when they cut rates, they're very quick in cutting rates. This time should be slow, but we still think, by the end of the year, you could get a 4% Fed funds rate. Market's pricing in about 4.5%. So there's still room for the market to price in further easing and even rally a bit along the curve.
There's a real key question, and we've been asking it all morning, about what that implies for the economy. Whether a 4% Fed funds rate and more aggressive rate cuts implies also an unemployment rate that has ticked higher, materially so, given some of the uptick that we've seen and expect to see in initial jobless claims on Wednesday. Do you think that there is a nonlinearity to what comes next in the labor market?
Yeah, great question with the unemployment rate and what's happening in the labor market. I mean, we do think the unemployment rate is going to move higher, but we see a mild recession. We see the unemployment rate only going up to about 5%. We think it's largely linear. And the reason we don't see it to be worse is because you don't have the overhang of corporate indebtedness, and the household balance sheets are still really good shape. I mean, the real issue here is that demand outstrips supply, and we had inflation, right? So the Fed's got to cool inflation. If that continues, I don't think that we have to have a deep recession, and we may even get skirt by with a soft landing. We're not as confident about that, but you don't see those typical large imbalances that would signal a deeper recession.
Michael Darda was talking just a couple weeks ago about how when you get a 0.5 percentage point uptick in such a short period of time in the unemployment rate as we have gotten over the past 6 to 8 months, never in history have we not gotten a more nonlinear shift upward in the unemployment rate and a recession. How hard is it to say this time is different?
Well, you always struggle to say this time is different because it's been through so many cycles, and there's a lot of similarities. So part of what's happened with the increased unemployment rate is because supply is risen. So it's not necessarily a bad rise in the unemployment rate, and it has been very gradual. And the supply has really come surprisingly through increased immigration. Half of the rise in labor force has come from increased, immigration. So, I'm just a bit more encouraged that the Fed can kind of pull off, even if we get the mild recession we're looking for, I think the Fed declares victory on that. Now, I'm not in the camp really that we have to see this, nonlinear increase in unemployment. So this time it is different because there aren't the same imbalances that we have in place. Again, it's mostly an inflation issue that we're dealing with. Now, the one thing I would say is rental inflation. We all took for granted that was going to slow and roll over. Our own home, rental inflation models suggest, based on real-time measures from Zillow and CoreLogic, and also home prices at Lead, that rental inflation should come off. There's where, we got encouraging numbers in October. I hope that continues. But when I look at the other look at inflation in the core services, it's really transportation services. Other readings have come down quite nicely.
Kathleen Bush-Johnson, thank you so much with Nationwide. They're on something we're really focused on. Of course, in New York, it's a mess here. We've got a 3-zip code reach, and the 3-zip code reach is bidding wars for houses and rentals that are scooped up within hours, I would say. What you're hearing from Ms. Bush-Johnson there in Columbus, Ohio is a little bit different, to say the least.
And this is the reason why it's been so difficult to get a handle on it. How do you deal with the fact that there are many tiers of people who have different experiences, and you're seeing that playing out in some of the retailers as well?
Well, let's do some data check right now. And really a churn to the market, red and green. We had some green on the screen, then red on the screen. Now it's just flat out a churn with the SPX actually flat here into trading. The VIX expands out to 14.13. No big deal, but I got a yield back up, 4.90 on the 2-year yield, 10-year yield 4.47. Oil here, $78 a barrel. It's a churn here on a Monday, maybe towards the wall if economic data Tuesday and Wednesday. The Standard & Poor's 100, it's flat, down 0.01%.
Yeah, basically not moving. I really think that this Javier Milei, the Argentinian president now that just got elected, I think that's fascinating. Just reading some of his comments, some of them that I can read on air. One of them, just after he won, today starts the rebuilding of Argentina. There's no room for gradual measures.
I'd go with the analog of Liz Truss. We're going to have to see. It's not Britain. I get that. I don't pretend to be expert in it. We've got Patrick and the team in Buenos Aires is really one of our great Latin American teams. They'll have a lot of reporting on this, but have we heard this before? I think so.
This is somebody who is rather bombastic in many of his comments. I just think it's interesting when you have someone who's going to throw away the currency, throw away the Ministry of Health, throw away the Ministry of Education. What do you have left? How do you do this?
Can I give you my theme for next year?
Please, I've been waiting for it.
I stole it from Lyle Brainerd. She whispered to me at the White House Correspondents' Dinner. It's a cumulative 2024. And I say cumulative 2024 because the obvious thing is the inflation we're all feeling. And maybe it's going to be all of those trends accumulating across 4 years to a presidential election late in 2024. But to me, the heart and soul of it is the stock market and all the gloom out there. Pre-pandemic, 4 years back, 3108 to 4514. We've got a cumulative 45% lift in the stock market, and nobody's celebrating.
You know what I am going to have as my theme, and I stole this from a New York Times writer, automated capitalism. This idea of all the fees that we're paying to all the different streaming and other subscription cultures.
There. Netflix sent me a love note, $22 a month this weekend.
I'm sure quite a love note.
They said, good news. It's good news I can use.
I think it's important to remember that there are other sources of foreign direct investment, and the U.S. is, of course, an important one. But China has other partners that they can turn to. So there is leverage here, but it is not it's not limitless leverage. But I think that China is looking at the U.S. political situation and sees lots of potential for things to shift come this time next year.
Hinting at the election cycle and all that can come with it, Anna Ashton, Director of China Corporate Affairs and U.S.-China at Eurasia Group, talking after last week's confab with President Biden and Xi Jinping. At least they resumed communication, and a lot of people saw that as a win. Right now in markets, very much range-bound as people take a look at a quiet, shortened week from the Thanksgiving holiday in the United States. But sanguine, Tom, I would say that that's really the mood. We are seeing a stability with 10-year yields barely moving up just 3 basis points, and S&P futures basically flat.
Yeah, I agree. It's a churn to the market, and we're going to squeeze it all. I could say a holiday lengthened work week because that's what it feels like in the media. But, we're going to squeeze it into a Wednesday data dump. Michael McKee will help us with that. But, my head's spinning as much as it was 12 months ago. I mean, it's the times we live in.
I would agree. I just want to highlight 2 names that we really have been focused on throughout the morning, Microsoft and NVIDIA. Microsoft having given up a lot of the earlier gains after saying that they had hired Sam Altman to head an internal AI kind of program from OpenAI after he was ousted as CEO. Interesting to see the give back, especially after those comments of the chief technologist and talking about uniting OpenAI. NVIDIA to report earnings tomorrow, and those shares still up near record
highs. And I said last week, I don't give a damn, except I do. All of a sudden, NVIDIA, forgetting about the festivities this weekend, it's a big deal. Mohamed El-Erian with us Friday. Bramo off, El-Erian agreeing to sit in, attempt to substitute for Lisa Abramowicz. And he was busting my chops about an essay to come out. It came out this morning, Mohamed El-Erian, on Fed speak. Is there too much Fed speak? This is an important question.
He says, yes, there is too much Fed speak, and you should read it. It's a good column. I was reading it earlier. It's really a top-notch piece of thought.
Full disclosure, I'm a member of the Council on Foreign Relations. I can't say enough about his public service back well to World War II, starting with the Kennan essay and other great moments along the way. And I remember, I'm going to say 15 years ago, when the CFR, the Council on Foreign Relations, had the courage to reinvent themselves digitally. It is one of the greatest successes in anything we do, this in international relations. The website of the Council on Foreign Relations, which is the foundational intellectual input of Richard Haas. So what do you do when Haas exits? The joy is it's Michael Froman, president of the Council on Foreign Relations, to say he's former U.S. trade representative, barely describes the miles he has clocked on airplanes for this nation. Michael, just thrilled you could join us this morning. Congratulations on the new effort with the Council on Foreign Relations. It's a little busy out there, Michael. What are you focused on right now?
Well, we see the return of great power politics with Russia at war, the emergence of a competition, multi-dimension competition with China. And of course, you've got the war in the Middle East breaking out and global issues like pandemics and climate change still to deal with. So there are a lot of issues on the global agenda, a lot of demands for cooperation and collaboration. Precisely at a time when there's also a lot of fragmentation. So it's a very challenging period.
There is a bipartisan tone to the Council on Foreign Relations in this new Foreign Affairs magazine, your work with President Obama. There's Mr. Gates, Secretary of Defense, with an important essay in your Foreign Affairs magazine. Is it a bipartisan debate in Washington, or is our politics so fractured we're not having a normal CFR debate?
Well, clearly the country is more polarized politically than it's ever been. I think when it comes to foreign policy, national security, there is a bit more of a nonpartisan or bipartisan debate going on. The center left and the center right, I think, share a fair number of perspectives. And of course, then there are a wide range of perspectives from in both parties as well. But right now, whether it's Ukraine or the Middle East, I think the majority of both parties are very focused on providing the necessary support. And when it comes to an issue like China, there's a very strong bipartisan consensus that we need to be very firm with China and reset the relationship.
Focused on that, Ambassador Froman, just taking a look at what happened last week, do you think it truly was more of a success than maybe many people are giving it credit for?
I think it was a success in that the goal was to stabilize the relationship heading into 2024 when you have elections in Taiwan and elections in the United States where the China issue is clearly going to play a role. And I think they both achieve that in terms of not just talking, because we shouldn't confuse a meeting or a conversation with actual progress, but they did make actual progress on issues like military-to-military conflict management, on fentanyl, on climate change, and on really trying to reset the relationship going into next year. So President Xi gave a speech in San Francisco, which frankly could have been given 7 or 10 years ago. There was no wolf warrior diplomacy in evidence. There was no reference to the challenges and conflicts that have defined the relationship over the last few years. And I think there's a real effort on their part, for their own reasons, that the Chinese want to make sure that we have a more benign international environment looking ahead.
They want the appearance of at least some sort of back to the future when it comes to the business climate. But there's a real question about how much that really carries through. There was a lot of discussion about them buddying up with Iran, as well as North Korea, and particularly siding with them with respect to certain issues in Ukraine, as well as in Israel. Today, Chinese delegates are meeting with Arab nations to try to discuss what's going to happen in Israel. Do we have a sense of where they stand on this, of what they are going to argue for?
I think China is trying to figure out what its global role is beyond economics. It did play a role in witnessing the normalization of relations a bit between Iran and Saudi Arabia. That was a limited agreement around not bombing Saudi oil infrastructure. It has offered its help in Ukraine, but given the fact that it has a friendship without limits with Russia, that help is not being particularly welcomed by the Ukrainians. And in the Middle East, of course, I imagine the parties in the region will be seeking out support wherever they can in capitals around the world, including in China. I think to the degree that they can play a constructive role, of course, it should be welcomed. But that means really playing a role in providing a public good that they've never really done before. China's been amazingly disciplined about pursuing its national interests narrowly defined. And if they really want to be a global power, then they also have to help provide for some of the public good.
Michael, you are more identified with TPP than anyone I know, the failure of Trans-Pacific Partnership, something you worked on. The fact is we are deploying 4 military bases to the Philippines, 2 in Cagayan, Isabela, and that long, skinny island down towards the South China Sea, Palawan. Is our military doing TPP for us? Is that the actual TPP? Is the military expansion of America to the Pacific Rim?
I think one thing that's clear is that the more that China asserts itself across the region, the more the countries in the region want the U.S. to be present and engaged. And they're looking for our engagement in a military security sense, in a political dimension, but also in an economic dimension. This is the most economically dynamic region of the world, and they desperately want the U.S. to be engaged there, not just as a military power, but also as an economic power.
Michael Froman, again, congratulations, new duties at the Council on Foreign Relations. He's the president of the CF. Lisa, as the world, I feel like it's a soap opera. I feel like it's not like General Hospital. It's not like Luke and Laura. It's more like As the World Turns. Wired magazine, with their good authority, they are always out front here. Lisa, you can't make it up. OpenAI staff threatened to quit unless board resigns, and the key thing is 500 employees.
Which is the reason why people are wondering what's going to happen. And then that tweet that you were talking about, that X post saying
from Ilya, like
and Siskever basically saying he will do everything in his power to reunite the company. What that entails, given the fact that Sam Altman and Greg Brockman have been hired by Microsoft, is another question.
Yeah, here he is. I deeply regret my participation. We did this before. I can reunite the company. Here's the verbatim from Wired. This is all happening in real time. Folks, control room scrambling here this morning. In their letter, the OpenAI staff threatened to join Altman at Microsoft. Quote, Microsoft has assured us that there are positions for all OpenAI employees at this new subsidiary, should we choose to join.
This is basically Microsoft not acquiring OpenAI, just simply stealing the employees, right? I mean, they were basically talking about what this will look like.
As the world returns seconds ago, look for this in the 9 o'clock hour. Citigroup cuts more than 300 manager roles as part of restructuring. It's a busy Monday. Stay with us on radio and television. Good morning.